All right, looking good. Should be ready to go live. Coming through. You guys hear me loud and clear? Good to see you, my friend. Welcome, welcome. My man Lazy Boy in the chat. All right, let's get it rolling. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 10/20/2021, 8 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, appreciate that, brother. All right, let's get rocking and rolling. So it is no surprise to anyone that Bitcoin was able to take out the highs. We are officially trading at record all-time highs, fueled by the catalyst of the CME futures contract. Actually, it's the ETF of the futures contract, which if you're not familiar with that, it's just exposure to the futures, not the actual underlying spot. So not quite the ETF that everyone was hoping for, but a step in the right direction. Obviously saw quite the run up leading up to it, as expected. Current target still 72,000. Really not that big a deal at this point in time. It's like 10% away. So the real question is, are we going to keep running after that? Are altcoins going to follow? Etc. So let's go ahead and let's start with crypto today. It's been a while since we have done crypto first, so let's jump right in with the crypto. So obviously futures chart, BTC1. This is our current contract, 66,300. Strong close. Obviously new all-time high for closes yesterday. Strong histogram, all green. Well above the zero line, well above the slope line. Slope line is blue, inside of the bullish control zone. Bullish for sure, obviously, as we are at all-time highs. Basically just going sideways on the blue stochastic, as price essentially just climbed up from that 58,000 range. Saw a little bit of volume actually showing up here on the futures contracts, which is good, as we have basically just been in like a declining volume. We had like basically a high on volume back here on the initial sell-off, down to like 30K. And then we had a lower volume. Well, this one's a little higher. Lower volume here, lower volume here, lower volume here, and then here. And now we're seeing a little bit of volume showing up. So that is a good sign. It means that people are buying into the breakout. It does not mean that we're going to get continuation, but typically is a good sign and what you want to see. Typically when you get a breakout in a direction and you get consistent volume coming in, breakout of the range in the actual volume itself, it basically tells you that other people are seeing what you're seeing and confirming that we should get follow through. The real question is now, where is that follow through going to take us? Everything is bullish on the daily chart, so nothing to be worried about here. Obviously got quite a bit of continuation since our initial breakout of the channel itself. And then if we just kind of take a look at what we have going on here now. This is basically just a melt up on the moving average from the 821 cross back here on the daily. Not seeing any. I have a couple of little channels drawn. Nothing too crazy. If we go down to the 4 hour, I think I have it drawn on the spot chart already. But we basically have just a if we take the low down here and kind of follow up the price action like that, I think I have it drawn something like this. It doesn't quite fit perfectly on the futures chart, but we basically had a little channel like that, broke down from it, and now we're just cruising up here. So we have essentially at this point in time, we take that next high and just kind of go to this high right here, and we're just basically in another channel after the breakdown from the initial channel, still an ascending channel. The only difference being now is that, the slope or the intensity of the move to the upside has slowed. So we're still obviously in a strong uptrend, but the strength of the trend is slowing. So, which is not a problem. Even a consolidation or small pullback at this point in time would not be unreasonable. Even just a pullback to the breakout at some point in time in the near future would be nice, as it would be confirming that our previous all-time high, which was the resistance, is now acting as support. Nothing too crazy going on here on the TJD TDMACD. We have flipped the slope back over blue on the shorter time frames. We have a high back here, and then we have essentially like a double top high here. If this starts to roll over now, it's going to look like a little bit of short-term bearish divergence, as we did put in a higher high, but nothing to be alarmed about at this point in time. The way I look at all-time highs is, with the blue sky breakout, there's no reason for anyone to be a seller. Nobody has ever purchased this asset that is not in profit at the time. Therefore, typically things will continue to go up until there's some sort of technical zone or level hit. So, at this point in time, just waiting, paying attention to where some of our potential targets could be. Let me go ahead and just clear this out. We can take from that previous all-time high right here. We can take to the low right here at like 30K, and then we can use that to give ourselves a Fibonacci extension target. See where that might potentially lead us to on the shorter time frame. So our initial target of 1.236 would be like 80K from there. If we switch out to a longer time frame, from the initial move when futures was launched, and this is why people are bearish based on the futures. When the futures was launched, that was at 20K back in 2017, and that was literally like the all-time high. As soon as futures were launched, everybody just shorted it, and it only went down since then. So that's why this is sort of like a, buy the rumor, sell the news, or like a potential topping event, according to people. But here we see from the top right there to the bottom at like 3K there, the Fibonacci extension target, the 1.618, which is where we initially topped out, just shy of, but it's where we're at right now. So there's going to be a little bit of resistance at this level, as it is a key Fibonacci target. There is still potential. We're going to do something like a double top here. We do need to be careful at these levels. I'm not a fan of buying the breakout, but you guys already know that. I think more likely than not, this will act as at least some sort of temporary resistance. A lot of times what will happen is you'll come up to a previous all-time high. You will consolidate, push through that all-time high, and then if the breakout does not hold, you'll get what amounts to a throwover. Does that mean that it's just going to go down after that? No, sometimes it will break down and then continue back to the upside over time. But oftentimes, someone, a big bull, a market maker, etc., will use that level for the liquidity. Because if the previous all-time high is 64, 65, 66,000, you move the price action up to that, knowing there's a bunch of sellers in place there. So if you can force those sellers to become buyers by pushing through their stop loss or pushing to a new all-time high, most of those people will close their shorts or, take profits at that level, and then the price will continue to run to the upside. Therefore, they will become buyers instead of sellers. So if someone has a short order in place, there's a bunch of resistance, price action keeps moving up to it, buyers keep going through, buy through all of those shorts or all of those sell orders. Price action continues through those and to the upside. Typically, the stop losses will be placed within a couple % of that top. The stop loss for a short is basically just a buy to close that short position. Therefore, people will become net buyers. So you have people buying the breakout, you have stop losses being hit, and then you have basically the continuation trade, at which point in time, a bull, a market maker, I'm sorry, not a bull, a market maker or, whale will essentially use that liquidity, use all the buy orders coming in to now unload a large position that they would have not been able to otherwise unload at that price. Does that have to be the case? No. Bitcoin can literally just go up to 220,000 now, which is the 2.236. We just shoot straight up to 220,000, and crypto is right. The citadels open up. We all fly to Mars and live together happily ever after, laughing at all the no coiners, we do a giant statue of Peter Schiff on Mars to mock him from across the universe. I mean, that's obviously the bull scenario. The bear scenario is what I discussed, that we double top here and break down. Either one completely viable at this point in time. One thing that is slightly slightly alarming to me is on the monthly here. We basically have a lot of symmetry between these two candles. We have like an exact like $20,000 candle to the downside and now a $20,000 candle to the upside, taking us just to new all-time highs. All we need to see is just some continuation. Just need a little time. We're 9 days away from the monthly close. A new high on the monthly close will basically invalidate any potential bearishness that anyone could have. Just a monthly close above like basically 60,000 or higher, and there's no reason that anyone should be bearish or worried or cautious, in my opinion. Well, you should definitely be cautious, but in my opinion, there's nothing left. That was our previous all-time high, so as long as this closes above that, that looks great. If we get all of a sudden, continuation and this thing just gets bigger and greener and just keeps running, that's great. Opposite situation, if this sells off and we get a wick at the top here and close below 60,000, it will look bearish, like a double top, or at least not good. If we have this candle sell off more than 50% and we see it come down to like the mid 50s, it will look extremely bearish to me, as it would be like a monthly lower high print. So we'll have to see what happens. At this point in time, again, same thing. If we see continuation here, we're fine. If we see this top out a little lower and this top out a little higher, that could potentially look like bearish divergence on the monthly. But overall, I mean, there's no reason really to be bearish. We're not seeing so far, the stochastics are basically like blue is flat, purple is flat, but the blue is below the purple. So that's not great, but we've basically been going sideways for a couple months. So as long as the momentum picks back up, this thing keeps creeping to the upside. Will we be able to get back to this level again, or will we eventually print bearish divergence? It's possible either way. If we go to the moon and the Peter Ship statue gets built, or Mars or whatever, then probably that's enough continuation that there won't be any divergence. If we switch over to the weekly now, let's start with the big picture. Again, we have that higher high print. This close right here was essentially the same high print, and then we ran up a little over the weekend. So at this point in time, we're confirming a double top on the weekly, but we're getting follow through so far. Again, as long as this does not sell off below the open and then just print a double top, it looks great. We have reclaimed the slope line on the TJD TDMACD, bunch of green histograms back inside of the bullish control zone. Basically just going sideways on the stochastic, but the purple is still trending to the upside powerfully. Knife is up here, not at alarming levels or anything. Looks good. I mean, looks like a technical breakout so far. Nothing to see here. We're definitely gaining a little strength, gaining a little momentum to the upside, well away from the 200 exponential and simple moving average, back down here at like 17,000. So everything looking good on the weekly as far as the futures chart. Now, again, that same scenario we have to pay attention to, though, is if we do potentially top out here at some point in time with a higher high on price action, we're going to print bearish divergence on the weekly. Now, is that a big deal? Well, you could argue that we have a print from this point to this point where we have the same high on the stochastic with a much higher high on price action. So that's bearish divergence between those 2 points. And then this could potentially be, bearish divergence between that point and that point. All we need to do to invalidate any potential bearish divergence is just continue to the upside. As long as this just moves up here and eventually takes out, the 90 level on the weekly, all we get is convergence. The price action will be at a new high. The stochastics will be at a new high. Same thing with the histogram right here. As long as we come up here and we take out that, 99.31 level on the MACD, that's fine. We'll be doing fine. Now, the problem is that we're way down here still, and we're just not getting all-time highs. But as long as we see follow-through for the next couple weeks or couple months, maybe we run through to the end of the year. January, we're still putting in all-time highs. As long as eventually this takes this out, it's just going to look like convergence. So, at this point in time, it looks like we basically just recharge for a little bit, and, we're shooting off to Mars, and, we've got all our tools. We've got a couple Masons on board. We're going to build the Citadel on Mars. Uncle Elon is going to bring up some Teslas for everyone, and his crown. He'll sit on the throne, and we'll build the giant Peter Schiff statue and mock him from space. So at this point in time, I think Bitcoin's going to plan, right? That's what everybody wants, I think. So yeah, looks good. Daily looks good. Weekly looks good. Monthly looks good. Yeah, we just want to see basically follow through at this point in time. But as far as I'm concerned, once you're at all-time highs, once you start confirming daily and weekly closes at those same all-time highs, with the exception of like, you know, a fake out breakout, a failed breakout, a double top, you know, throw over type scenario. There's no reason not to be bullish. So all I'm looking for now is some continuation to the upside. But more importantly, you know, the move has happened in Bitcoin. So if our next target is like 72 to like 78 or 80,000, somewhere around there, you know, that's, I mean, it's good. Let's go to our actual like Bitcoin chart now and take a look at that. So we can kind of get a little more accurate idea of some of these targets now. So again, let's switch over to our monthly here, and don't mind these random. That was like our volume arrow. Well, it doesn't matter. I'm just gonna leave it. So our previous all-time high back here, 20,000, down to our low at like 3,000. I'm just gonna throw that in place here, so we can get our Fibonacci extension targets up there. And then also I'm going to do one from our top right here, which was basically like 14,000. That was like the mid-cycle little mini bull top. And then to our bottom right here, that was like the CVD dump right there. And then we can kind of get some targets here. I'm going to, well, while we're here on this, we can see the MACD obviously has rolled back to the upside. We're seeing our first green monthly candle again. And then slope line in the RSI moving back to the upside as well. So that is good also. So now let's look at our weekly. Oh, and then candle wise, while we got it right here, you know, again, same thing. We have a big old candle. We're at all-time highs. All we got to do is just close the next like 9 days above that. So, and then there's literally no reason to be bearish on Bitcoin or anything but bullish on Bitcoin. So here we have on the weekly our all-time highs up here. You know, obviously this weekly close on spot action happened over the weekend. So that was at new all-time highs. So this is slightly more bullish than the actual futures chart. We see here we have higher histograms, green histograms on the MACD, saying that we are having, you know, basically diverging moving averages to the upside, showing strength. This price action is marching up here powerfully. This is like, you know, essentially three white soldiers, three big green candles in a row, each one like, you know, equal to or roughly the same size as or slightly bigger than the previous. And now we're starting off on our fourth one right here. That is typically a bullish continuation pattern, especially after breaking out of a short-term high right here at the 50,000 mark. So again, on the weekly, looking good. We do have to pay attention, obviously, once again, our 2.236 Fibonacci extension, which was the 14,000 down to the 4,000, the CVD dump, the mini top to the Rona dump. And then obviously that lines up perfectly, exactly at the same spot with the 1.618 of the 20,000 top to the 3,000 low. So we fell just slightly short of that, which is what I was saying before back here when we called out the bearish divergence in the top. I was saying that I would have much preferred it just creep up like $2,000 more and hit our top perfectly. As if you know anything about these algorithms and these bots, essentially they're programmed to move the price to a certain level and then execute a certain operation. So they are to move the price up to the Fibonacci extension, and then they are to go from a net buyer to a net seller. So sometimes what happens is the bots are fighting each other. Someone's trying to front run it, and two whales are battling each other. They were both bullish the whole way up. And then one of those whales has, you know, a massive position that says, okay, we're going to take profits now and sell off. The other whale's position is still trying to push the price up higher and higher and higher. And then eventually the one that's pushing the price up higher and higher and higher, just like if you were trying to swim upstream, you could swim upstream for a while, and then eventually you just say, screw it, I'm not going to fight the current anymore. You know, I'm just going to go with the flow. And then the flow is down. So both those whales are net sellers now, instead of one being a buyer, one being a seller, or one being a holder, one being a seller. And then they reaccumulate back down here at a lower level, and then again, try to fight the current again. And then once they move up, put in that higher low we were talking about, come down perfectly to the 1.382 Fibonacci extension, holds solid on the weekly, and then they're able to push the price back up here. Now, what we have to be careful to is now that target has been hit. So the one whale was pushing the price up to that target, trying to top out and then selling into it. The other whale was still waiting because we hadn't hit that target yet. So we had a net buyer still, or neutral, and then we had a net seller trying to just take position. The net seller won, and then eventually, you know, the market picked back up here, and now we have potential for both those targets to have been hit. The one that did not get hit now can potentially flip to a net seller. So we have to be very, very careful. And we'll see this happen all the time. We'll come up, almost hit a fib extension target or Fibonacci retracement target, come down here, recharge, come all the way back up to price action, and then break out to a new high. And then that is like a throw over because we finally have met that target. And now that algo flips to a net seller. So that's what we have to be very careful for. Now, again, we're at new all-time highs. There's no resistance. There's no reason for anyone to actually sell, take profits. You would assume they just, they're just going to keep cruising downstream. Everybody's sitting on a floaty. We all have floating coolers next to us. And, we're talking about how rich we're going to be. We're talking about the Citadel. We're all laughing at Peter Schiff. Elon's over here like building rockets and telling us about how good Tesla is. And everybody's just floating downstream, drinking those beers, living the good life. So why would anybody get off? Why would anybody, park their little floaty and go home? The party's just getting started. But sometimes someone has a particular destination in mind, being our Fibonacci extensions. So that's what we have to be cautious of. We have to be cautious of a failed breakout, throw over, or, basically those algos getting hit. Now, assuming that is not the case, and we're going to continue to the upside, my next main target that I like to look at is the 2.618. You can go back and see all my targets for, our potential all-time high, wave 5 continuation, all that stuff. You can go back and look at the video. I basically have 65,000, 72,000, 79,000, and then I think it was 109,000. So that's what I'm paying attention to. And those are all based off of like the key fib levels. We can put this one in play right here as well. Put the yellow guy in play there. And just like when we're selling off, we look for our key Fibonacci levels for a breakdown to the downside. Just like when we're moving up here, we're taking the stairs. So we're going to keep pushing up, finding support, pushing up, finding support, pushing up. So our next target to the upside, roughly 78 to 80,000. We push up, and then we want to come back down and find support. So we want to walk up the stair, then we come back down, put it in a new floor. Then we want to walk up the next stair, come down, put it in a floor, and just continue marching up to the upside. So now you'll see here we have our red fib, which is the longest time frame. We have our orange fib, which you kind of can't see because everything's lining up, which is our mid time frame. And then we have the yellow fib, which is, let me move that over just a little bit. That one's our shortest time frame there. So now if we just look at those fibs and see where do we have confluence once again? Well, obviously this was the previous top right here. We have the 2.236 in orange and the 1.618 in red. So, all three fibs line up perfectly right there. So that's going to be a tough resistance. That's where we're at right now, all-time highs. Once we break through that resistance, or assuming we break through that resistance, our next target will be the 80,000. We have the 1.236. Then we have our 90,000, 91,000. Then we have our 100,000, which that's a nice round number. That's a 1.5 fib extension. That's definitely a potential topping point for like the entire run. But more importantly, right above that, we have the 1.618 in yellow, which is the high to low short term. We have the 2.618 in orange, which is the 14,000 mid market top to the Rona low. And those line up perfectly right there at 110. And then assuming we just keep cruising to the upside and nothing can stop us, we're invincible. We have the 2.236 at 185,000. And then finally, we have the 2.236 in red up here at 215,000. Do I think we get to those targets this cycle? No, I do not. I do not think we get to those targets. Do I believe in lengthening cycles? No, I do not. It's literally written in Bitcoin's code that it will have a 4-year cycle based on the halving event. So I think that we will probably, like we have had the previous, halving cycles, I think we will probably see continuation through the end of the year. Sometime around December or January, we will top, and then we'll go into a longer bear market. And then what I'll be paying attention to is, do we go into essentially the, I don't know if any of you guys watch or have heard of Alessio Rustani, but he basically made he does very nice videos, uses technicals. I like him, well-spoken, cool guy, uses actual technical analysis, brings on good guests. If you have not checked out his channel, I highly recommend it. But if you have heard of me, I'm sure you've heard of him as well. But he basically just did a video very similar to what I've been saying this whole time, that I think from the inception of Bitcoin till now, we're putting in the wave 5 of a large structure. Each one of our previous 4-year bull markets was wave 1, wave 3, and now here we're in the middle of wave 5. So when wave 5 tops out, we have to be very careful that when that tops out, we don't come down and put in what amounts to a retracement of the entire 5-wave structure. I'm not sure if it's still on this chart. Let's look at this. Yeah, okay. He just did like basically this video, but a simplified version of it, where this was our wave 1, you know, and if you have not checked out this video, I highly recommend it. It's extremely informational and will give you a realistic view as to what's potentially happening. But our wave 1 was our top in 2013. Our wave 2 was our bottom in 2015. Our wave 3 was our top in 2017, 2018. Our wave 4 was our bottom in 2019. And then our wave 5 is what we're in the middle of now. Now, what we're paying attention to is the previous Fibonacci extension levels to see where it could potentially be topping out. So you'll see I have the green fib down here, which is from bottom to top. We have the retracement, and then we can take the Fibonacci extension from the top of wave 1 right here, and we can pull that to the, I'm going to just turn that white for a second here, to the top of our wave 3, and that was the 2.236. So we know we topped out at the 2.236 of the wave 1 to wave 2 retracement. And then we do the same thing for our wave 3. We take the top at 20,000. We take the bottom at roughly 3,000, and then we can see which one of our fib extensions we're potentially topping out at. So here we're at the 1.5 now, in between that and the 1.618. So if we come up to the 1.618, that's that $72,000 level that I spoke of. So a potential top there, or maybe we just keep on cruising up here and we make it to 2.236 or one of these other ones. Now that's $250,000. Do I think we still have enough juice in the tank to get there? It's possible. It is completely possible that Bitcoin just goes literally parabolic to $250,000. It is definitely possible. It's very unlikely in my opinion, but it's definitely possible. And then after that is what I'm talking about, where we have to be very, very careful, because once this cycle does top out, and we look at this entire chart, well, this is a very technically trading, 4-year cycle high, 4-year cycle high, potential 4-year cycle high, with a very technical trading 5-wave Elliott wave structure, at which point in time, after we top out, wherever that top is at, we have this Fibonacci in place. And this Fibonacci right here, I'm going to make that a little bolder, goes all the way from the bottom of the initial cycle all the way to the top of this cycle. Now, we don't know where the top is going to be, but assuming it's up here where we're at right now, roughly, where does that line up? Well, if we look back now, once we have that potential target in place, we see the 382 was the top of the wave 1 right here. So that's a little bit of confluence between these levels. We see like the initial top back here at like the 618. We see some resistance back here at 786, but we don't know until this actually tops out and then pulls back to the 236. We can't actually call this like a confirmed for sure top. But the problem is, once this does top out, and when it breaks down, we have the initial pullback of each of our waves, the 1, the 3, and then the 5. So the initial pullback will take us to that green pullback here was between the 236 and the 382 in green. It's tough to tell with all the stuff on here. The wave 3, from the bottom of wave 2 to the top of the wave 3 in green right here, the pullback was exactly to the 382. So we would expect what happens here is from this bottom here till the top up here, wherever that happens at, we would expect this top to roughly, let's just say we double top right now and that's it. We would expect it to be roughly at the 236 in green for the wave 5, which would take us back down eventually to 31,700. If it's the 382, it would take us down to 20,300. So somewhere between 20 and 32,000 is a pretty big range. But the problem is with the wave 5 is after your initial pullback of just the wave itself, so we have the wave 1 pullback, that's our 2, continuation. Wave 3 pullback, bottoms out, continuation. Once the wave 5 hits, you not only retrace the green fib of the wave 5, you retrace from the bottom of the initial wave 1 to the top of the wave 5. So wherever this tops out at, if this is a 5-wave structure, if this is legitimately an Elliott wave 5-wave structure trading technically, which it very much is perfectly, almost perfectly, which is obviously technically bot and algo driven, what we would expect to happen is a minimum pullback of a 236, which takes us down to a $6,842 Bitcoin. What does it take for Bitcoin to get to $6,842? Satoshi comes out, coins move from his initial wallet, some whales dump, FUD from the government, whatever. Bitcoin's dead, it's done, it's hacked, whatever. Inadvertent fork in the chain, anything could happen to take it to there, whatever the FUD is going to be. But it could technically, based on this chart, could still hit $6,800. Will that happen? I don't know. But technically, it looks like probably eventually. Could it pull back to the 382 and that's where you get that $1,531 target? Sure, it's possible. It's possible. But we have to wait and see. We have to wait and see. And this is always going to be stair steps down along the way. But and you're saying, oh, you're bearish. We're at 66,000, headed to 100,000. The Citadel, the moon, whatever. What's wrong with you? Unsubscribe, dislike, I hate you. But this is all part of market structure, and this is a good thing because what this leads to, what we can expect to happen, if I'm correct, if this happens, and if Alessio Rastani, again, is correct, what this means is this is just the top of a wave one. So if this 5-wave structure then becomes our wave one, and then our wave two pullback, damn it, I didn't mean to put it right there. Hang on one sec. And again, I know people are like, it'll never go to 6,000. You're mean. I hate you. I hate you. Just to pull back to the 236, 6,500. And then what happens after that? Well, we continue to the upside. We keep going. So if that's our wave one, excuse me, if that's our wave one on the monthly, and then we get our wave two pullback right here, and then we expect our wave three to be roughly the length of the wave one, that's a $70,000 wave, basically. $70-something thousand wave or $70,000 wave. So from our pullback here to 6,800, this just keeps going. It keeps going parabolic to the upside. And then we put in a new high, and then we put in our 4, and then we put in our 5, and now we have a wave 5 structure that makes up the entire wave 1 of the larger wave 5. Then we have a wave 2 pullback, and then we see continuation, which is our wave 3, and then a pullback, and then continuation. So you could argue that I'm crazy for saying we're going to go back to 5,000 or 1,000 or whatever, but it happens constantly in markets. Matter of fact, if we break down each of our 5 waves in the initial 5-wave structure, we can see that those have 5 waves inside of them. And that's where like the Fibonacci comes in. It's like waves inside waves inside waves. It's like waveception. So the key is right here, once we get that initial pullback, then once we bottom out from our wave 1 of the larger, we can then start looking at Fibonacci extension targets again to the upside. So then we say that our wave 3 on the macro level is going to take us up to one of these key levels. Maybe it's the 1.618, and then we have a pullback, and then we get our wave 5. Maybe it's the 2.236. Maybe it's the 2.618. Where is that going to be? Well, the 1.618 of the pullback, assuming we get a minimum pullback to the 236, that's the one that takes us to 395,000. So you could argue that I'm bearish. You could say that I'm being mean and that I'm fudding the corn at all-time highs. But I'm just being realistic and trading technically. And, there's a very high likelihood that I will be right. And by then, if you don't believe me and I am right, you'll probably quit. You'll lose all your money and you'll quit the space. And then I will own your corns, or some whale will own your corns. And then eventually you'll hate Bitcoin because it will be at 400,000 and you got fudded out. So be realistic here. So if we get our initial pullback to the 236, we get our 1.618 Fibonacci extension target, and then again, we get a 236 pullback, the minimum, most bullish pullback, that's from like 400,000, and then we pull back from 400,000 to 150,000, and then we do the same thing again for our wave 5. So again, from the top of roughly the wave 3, and again, this is hypothetical now because we don't know these specific points, but we can calculate, extrapolate into the future and get potential targets. So then again, if we hit a 1.618 here, the 1.618 of the 3 to 4 pullback Fibonacci extension, minimum target we would expect is 836,000. Could we get to the 1,169,000? Could we get to the 2.618? Bitcoin goes parabolic. The Citadels, the moon. We're launching missiles at Earth now because we hate Earth because there are no coiners and we're Bitcoiners and we have our own planets. Maybe we have all the planets now. And now, we've got all the technology and we're just the kings and the Citadel and we're the new human race because we're, whole coiners, and they're not. Sure. And what's the target for that? 2,375,000. So you could argue that I'm mean and that I'm fudding the Bitcoins at all-time highs and that I'm wrong. It'll never go to $1,600 again because you're stupid. But you could also argue that I'm the most bullish because I'm using technical analysis to determine actual targets. So when people say Bitcoin to $1 million, Bitcoin to 100,000, sure, I can say whatever I want. I can say Bitcoin to $1 gazillion, but it means nothing unless I can back it up with technicals, and I can and have backed it up with technical arguments. So this is the best case scenario. This is what we all hope for. You might not realize it, but the best case scenario is when this tops out on this 5-wave structure, wherever that ends up being, the best case scenario is that we get the breakdown and retracement of the 5 waves, and then we see a technical pivot somewhere in between like 6,500 and 1,500. Because if we do, that literally all but guarantees, because I'm not the only one looking at this. Now we know who Alessio Rastani is also looking at this. Now we know there's a bunch of other technical traders around the world also looking at the same thing I'm looking at. And what does that mean? It means that it has an exponentially high likelihood. Something trading extremely technically like this continues to trade technically. There's an extremely high likelihood that people will tweet about it. All the Twitter warriors will get on board too. And all the like FOMO people and all the influencers and all the like made up people that don't know anything about technical analysis and just say crazy things will see this chart and they're like, that makes sense because I saw a video and it's perfect. And they'll realize that this is actually probably what's going to happen. Now, is it possible we just keep going right here? We go absolutely parabolic. We go straight to $1 trillion and, we win? Sure. Is it also possible that we crash down here and, Bitcoin keeps going down and never recovers? Sure. Both those are 100% possibilities. But the most likely, the most high likelihood of anything is that this situation plays out. There's a very high likelihood this situation plays out. And when it does, when we go into this longer bear market, it's probably not going to be just this little 1-year bear market where we pull back. And we will have taken out our previous all-time high if we just pull back to the 236. So people are going to get extremely bearish and Bitcoin's going to be dead and no one's going to want Bitcoin anymore. And people are going to capitulate and they're going to have lost everything. And it's going to be all over mainstream media. Bitcoin, biggest bubble ever, tulips, it pops, everyone decimated, government cracks down, Bitcoin hacked, no more Moon Citadel, Elon Musk sells, Michael Saylor disappears with everyone's fortune. Whatever the FUD is, I don't care. I mean, it's the same as the probabilities though. If this plays out technically, these 5 waves, and this 12 years worth of Bitcoin price action plays out perfectly, it's the same situation where, is it possible that if I get in my car and I drive to the grocery store, that I die in a car accident? Sure, there is a possibility of that happening. What is the possibility? Probably like 1 in a million. So there's a 1 in a million, this thing just keeps going up forever. There's a 1 in a million, this thing crashes down and, never goes back to all-time highs again. But there's a very high likelihood. There's a much more probable likelihood that if I get in my car, I drive to the grocery store, I buy groceries, and then I come back home, that I just make it back home safely with groceries. So it might look bad. I might have to slam on the brakes at one point in time. I may have to stop my car. I may run out of gas. Those things are all much more likely. That's the likelihood of this pullback. Technical trading. But eventually I will be at new all-time highs. We will hit, $250,000 Bitcoin, $1 trillion Bitcoin, whatever the targets are extrapolated. If we can use technicals to back them up, there's a much higher likelihood of them happening because there's going to be other people looking at it as well. If I just say right now, based on my feelings and the way my heart is when Bitcoin is going up, I think we're going to make it to $167,000 because that's a good number and I feel good about it. And that's the amount that I'll be able to pay off my house at. Sure, that you can definitely say that, but you have no technicals to back it up. We have technicals right here. And the fact that I'm a technical analyst and that's what I go by, and then I see somebody else like Alessio Rastani doing the same thing on their chart, and I think, well, if there's 2 of us doing it, there must be 3. Maybe there's 5, maybe there's 10, maybe there's 100. So the fact of the matter is the probability of this becoming a mainstream legitimate idea and this 5-wave structure with the pullback, that means that we will probably have the best buying opportunity of our lifetimes at some point in time in the next couple years. And then after that, that's when you really have that last chance. That's when literally, becoming a whole coiner if you're not already, or getting those 21 Bitcoin if that's your goal or whatever. Everybody has their own goals based on where they're at in life. Maybe you just want to pay off all your debts. Maybe you want to have one whole Bitcoin. Maybe you want to own 21 Bitcoins. Maybe you want to own, 1 million Bitcoins. I don't know. I don't know anyone's situation specifically or finances, but the fact of the matter is, if Bitcoin goes down to 6,000 or 1,500 or something like that, that will literally be the best buying opportunity ever, with a small likelihood that it goes to zero. Will it ever get there? We have to wait and see. But I have a strong conviction that we do get there eventually. So, you know, when people get FOMO now and we're at new all-time highs and we're going to the moon and they wish they would have bought back when Bitcoin was 10,000 or 15,000 or whatever, you're going to have another chance. Because all we do this whole time, we take the stair, then we step down, put in a new floor, stair up, step down, stair up, lower high, put in a new floor, and then continue the step back to the upside. Same thing again, new high. We're going to eventually come back down. So where we come back down to, well, we won't know yet, but we have a good chance to get back in at an ideal level eventually when the time is right. So, you know, but that's the macro view. That's the big picture view. That is how Bitcoin gets to $1 million. That is how Bitcoin gets to $250,000. That is literally the road to, you know, 1 million or plus, whatever. So there you have it. That's the legitimate technical breakdown. And now that I'm seeing other people doing the same thing again, all that does is give me further conviction in Bitcoin in the long run, but also that when this cycle tops out, that most people probably will not still be on board. Most people will have capitulated. If Bitcoin literally went to 100,000 now, we would have more people than ever interested in Bitcoin. But if it goes back down to 10,000 after that, most of those people will be gone forever and never come back. If it goes to 1,500, 95% of the hodlers, the diamond hands, the Bitcoin, you know, cult will be dead. They will have literally given up or, you know, capitulated on either Bitcoin or life at that point in time. So, you know, it's very unfortunate, but that's how technicals trade. That's how you get washouts, and then that's how you get continuation. So, you know, that's a very technical view on how Bitcoin can legitimately get up there. And you know what? It makes me super bullish seeing somebody like Alessio Rossani making that same video. So we're very close to crossing that daily 200 exponential above the 200 simple, at which point in time, this is going to look super juicy. Again, though, there is one thing we need to be careful of, you know, and again, I told you back here previously, I was 75% bullish, you know, then we get to the new all-time highs. Now I'm, you know, whatever, 90%, 90 whatever percent bullish. Let's look back here. This is our last thing that we need to be cautious about, okay? We put in that all-time high back here, or that cycle high at 14,000 after we flipped the 200 above the 200 simple, 200 exponential above 200 simple. We had a fake out breakdown. We came down, put in another lower high. Both the 200 exponential and simple flipped over bearish. We came back up. We took out that high, not the previous high right here, but when we came back up, we were right about to get the 200 exponential and 200 simple cross, and we saw something happen that we often see happen. That is a retest of those averages to see if they act as support. But when we did, that was that CVD dump. That was that Rona dump right there. And we broke back down and took out those lows substantially. After that, you know, obviously we went on our bull market that we're currently in. So again, we see that breakdown. We come back up. We take out that high right there. We come back up, not put in a macro high yet, but then we come back down, find support here initially, and then we're right about to get the 200 exponential and simple. Now we're taking out the previous all-time high, which is obviously very bullish, but it would not be unrealistic to think that we see a breakdown to 52,000 or potentially to retest the 200 exponential and simple at 45,000. That to me would be a buying opportunity. But again, we would have to be very careful that we don't get this same signature again, where we get the breakdown, we get a little bounce right there, and then we actually break down lower and take out this previous low. Now, again, if we did take out that $28,000 low, where do we go to? You know, 22,000, 24,000. I don't know. You know, we'll have to look at our Fibonacci targets again to look at that. But it would just be a rejection of this daily 200 exponential cross to the upside. The probability of that happening at this point in time, I would give a low probability, maybe 7%. But it is still a probability and something that we have seen happen not only on Bitcoin specifically, but on many, many other asset classes. So at this point in time, my main cautions are a potential double top retest of the 200 exponential and simple moving average, which again will at least be a scalp opportunity to the upside, but then just follow through. Does that have to happen? No. If we break down, are we going to see support at $53,000? Yes. Will that support hold? I don't know. Probabilities on everything. I do know that on the daily here, the blue stochastic has literally been just going sideways while price action floated to the upside. We have never seen that take place before. I'm not saying it's manipulation. I'm not saying the whales are messing with our corns. But typically what you see is like this. You see a move to the upside. Can you guys see that? I want to leave our current price action on there. I don't know how well you'll be able to see all this. But typically we'll see a move to the upside and then, a sell-off back down to the downside and then a push back up. Again, here we see sideways action, but some volatility in it. Here we see the opposite. We come up and then we see like a rising, wedge or ascending channel taking place on the stochastic. And I'm looking at the blue stochastic here. And then we see a breakdown eventually. Here we see that same signature again. Parabolic move to the upside, and then we see like an ascending wedge or ascending channel, and then a breakdown. Here we see just a peak on the Stochs, peak on the Stochs, peak on the Stochs, peak on the Stochs, peak, retest for a lower high, divergence. That was our previous little top up there. And then again, now we're seeing this same signature. We just kind of go sideways. So we're technically bouncing the 200 simple, the purple stochastic. But what's happening right here? We're basically just barely hanging on for our dear lives at this point in time. So any move to the downside, the blue is going to cross below the purple. That does not mean game over, because we could cross below the purple, come back up, and keep moving to the upside. But what it does mean is every time that has happened, every other time that has happened, here we broke down, we saved it, moved back up, and then sold off, moved back up, and then sold off. Here, we, basically touch the purple, touch the purple, touch the purple, breakdown, touch the purple, breakdown. So we have to be careful. We're at levels that are unsustainable. The previous top right here, the one we just looked at, that was our 41,000, and then we sold down to 28,000. So it was about a 30% sell-off or whatever. The one after that, this was our first initial top right here, the first of our bearish divergence for the $64,000 top. That was 58,000, and then we sold down to 42,000. So that was 16,000, another like 33% sell-off. And then again, we see these other little sell-offs along the way. And then finally, the breakdown, which is like our 50% breakdown here. Now, what is that going to mean for Bitcoin? Does it continue to the upside? There's a high probability that it continues to the upside after that. What does it mean for altcoins? That means that there's going to be opportunity in altcoins. Is it going to be opportunity because altcoins go down? If Bitcoin sells off all of a sudden 25%, is the opportunity going to be that altcoins sell off 50% and then recover? Is the opportunity going to be that Bitcoin sells off 25%, altcoins sell off 25%, and then alts run to new all-time highs? That's what we're looking for. We're looking for opportunity based on what we're seeing in the charts. So just because I'm calling for a potential, double top, retest, confirmation, whatever, just because we're at these elevated levels does not mean that we're all of a sudden going to get bearish on Bitcoin. What it means is that we're going to look for the opportunity that the market's presenting to us, and then we're going to take advantage of those opportunities. And more than likely, if we see a breakdown and Bitcoin holds and stays bullish, the opportunity is going to be in altcoins. And to confirm that, I'm going to skip over Ethereum for just a moment. To confirm that, we're going to look at crypto market cap and crypto Bitcoin dominance. So, crypto market cap, we had the high back here at 2.4 trillion. Here we have the high again at 2.4 trillion, potential double top. We accumulate, put in a higher low, continuation to the upside. Looks good, looks good. New all-time highs on crypto market cap. Crypto is worth more than it's ever been worth before. But this is with Bitcoin barely putting in all-time highs, and most altcoins are not putting in all-time highs. So what is this chart going to look like if Bitcoin keeps running, or if a bunch of altcoins all of a sudden putting in all-time highs? This is going to look extremely bullish. Very like parabolic green big boy candles. 3 trillion, 5 trillion, 10 trillion. Definitely possibility. Let's look at our Bitcoin dominance chart. This is what we've been talking about. We now have broken above the 21. We're consolidating above the 21. We have put in essentially what amounts to a double bottom on the Bitcoin chart, which we were expecting based on our bullish divergence between these 2 points. So are we going to come down and put in a third drive of bullish divergence, come all the way back down and take out that low? Are we going to consolidate here and get the 821 cross? I don't know. I think more likely than not, we're going to get the 821 cross, and we're going to see Bitcoin, stealing back market cap from all the shitcoins. So what is that going to mean? Well, I think if Bitcoin starts running up parabolically to 70,000, 80,000, 100,000, I think people will start selling off all their Shiba Inus and, all their Dogecoins and all these trash bag projects that have had good gains but are just junk. They're trash. And that's where we see the FOMO come in and Bitcoin regains market cap. The alternative situation is the bearish one, that this is a double top right here, and that all of a sudden Bitcoin starts selling off on price action, and we see that double top, we see that failed breakout, we see that Fibonacci extension target get hit, and then a breakdown from these levels, and then we see the capitulation in altcoins as people realize that they have loaded up their bags with trash. Bitcoin's the only good thing, and even Bitcoin selling off. So either way, either one of those scenarios, Bitcoin goes parabolic and alts do not, or Bitcoin dumps and alts dump faster, will lead to, a bullish big green candle to the upside. If this 821 crosses to the upside, if we just maintain Bitcoin dominance above 45.6, that will happen. It will happen. Here, we almost held it, and then it failed, and we broke down, and that's when alts went on a parabolic rally. That is a possibility, for sure. This is the alternative situation. In 2018, Bitcoin basically, after alts went on the parabolic rally, they started capitulating. Bitcoin regained that market cap dominance, and then throughout the entire bear market, Bitcoin gained market cap compared to alts, but not because Bitcoin was going up in value, but because alts were going down much faster. So either of those is a possibility. All markets go up, all cryptos go up, but Bitcoin goes up faster and gains, or, we sell off, but Bitcoin doesn't sell off as much. So it regains Bitcoin dominance because alts are capitulating. Either one of those, very high likelihood, very good possibility. Also a possibility, we get a failed breakout type situation like this, break back down, alts go parabolic while Bitcoin goes up, or, Bitcoin goes down and alts don't go down as much because people are believers and, all the paper-handed Bitcoin holders sell, but all the intelligent Fibonacci investors don't sell, they hodl because obviously, there's nothing wrong with $500 trillion market cap on some shitcoin that does nothing. Sure. Or 500 trillion circulating supply. So that's what we're paying attention to. That's the macro view. That's what we're looking out for. So now we have a road for Bitcoin to go to $1 million. We have a road for Bitcoin to go to $1,000. There are different probabilities affiliated with each of those. We have a road to Bitcoin going parabolic. We have a road to altcoins going parabolic. We have all the situations laid out in front of us. We have specific targets and we have technicals to back them up. And then afterwards, we'll hear things like this. We'll call out these moves right here, and then we'll see exactly what happened with Pinterest today. We've been waiting for the Pinterest gap fill, right? And then all of a sudden, with no inside knowledge or anything, what happened today? Pinterest filled the gap. But what did we hear about today? What was the catalyst for the Pinterest gap fill that we knew was going to happen? We anticipated was going to happen, that we laid out on the charts weeks ago. What was the catalyst? PayPal may buy Pinterest for $70 per share. Current trading price, $53 per share. Well, that doesn't even make sense. Why would they say we're going to buy it at $70 per share when it's trading at 53? Why don't they just say we'll buy it at 50? Who knows? Maybe because they need to push the price up so a bear could unload and then the deal doesn't go through. I don't care. But the fact of the matter is the technicals were telling us that PayPal was going to come out and potentially buy Pinterest at $70 a share before anyone else knew that. So that's why these technicals are so much more important than the catalyst, than the news. Elon Musk is a buyer. Michael Saylor steals everyone's Bitcoin and runs away. I don't know what's going to be. Aliens attack and Bitcoin is the only way that we can pay them off so they don't wipe out the human race. Whatever it is, whatever the fundamentals are going to be, the technicals are telling us way beforehand. That's why these charts are so important, and that's why we're going to take a short break. So I'll be back in just a moment, guys. I'm going to grab a drink, use the restroom, and we will continue on with the stream. Jump in with Ethereum, and I will engage with chat. So grab your popcorn, grab your drink, and we'll be back in like 2 minutes. And feel free to leave some messages in the comments or whatever, questions, etc. But we're going to jump into crypto next and keep running, losing control. All right. Sorry if I just burped in the mic. That was not intentional. So what's up, lazy boy? Good to see you, my friend. Peter says, yes, I watched that video. I'm assuming you're talking about the Alessio Rastani one, or yeah, probably. But also, obviously, you've watched my video where I laid that out like a month ago or whatever. Actually, I laid it out a long time ago, but yeah, I mean, that's what I like to see. Sometimes people get mad when someone else does the same thing as they do or copies them or whatever. I love that. That's confirmation to me that I'm seeing something big picture and that someone else that's intelligent and trades technically is seeing that same damn thing. And that is the best case scenario. That's what technical analysis is all about. Psychology. So if I see a support line or a resistance line or a key fib extension or something like that and nobody else sees it, who cares? I'm the only one who sees it. Who cares? Nobody else is going to sell there. Nobody else is going to buy there. Everybody's got to see it. And that's how we win. We all get, it's that hive mentality. Technical analysis is basically like the Reddit of TA, or of trading. Rather than us all getting together and saying, let's all short squeeze GMC, or, wait, that's not even the right one. Game, sorry. I think they're like out of business. Let's all short squeeze AMC. I think I combined GameStop and AMC. Let's all short squeeze, whatever. Well, we do that, but without communicating with each other. I look at my charts and I say, this looks very technical. This looks like a possibility. Also, Alessio Rastani does the same thing. Some other technical analyst all over the world does the same thing. And then we all hive mind communicate together and say, okay, let's all sell off at this level and buy at this level. But we do it without colluding. We do it using actual technical support, resistance, extensions, et cetera, et cetera, et cetera. So that's why it's so powerful of a tool. Because while everybody else is communicating on Reddit, we're doing the same thing, but we're doing it without even speaking to each other. And that's why this stuff is so crucial. And sometimes it's going to hurt people's feelings. I'm going to get people that unsubscribe. Because I can say Bitcoin's going to $1 million a coin, but if I say Bitcoin's going to 1,000, I'm going to lose more subscribers than I'm gaining. Even though I'm the most bullish on Bitcoin, the fact that I say something bearish or something realistic or possible that people don't like, unsubscribe. I'm going over to, whatever channel where they don't talk mean about my coins. But I want to be prepared. I want you guys to be prepared. That's what it's all about. So, Peter said, Bubblies, what's up, brother? Good to see you. What's happening? Doing some technical analysis. Peter Gerd says, yes, I want 21 million Bitcoins. Don't be greedy, Peter. I mean, if 20 million Bitcoins is not enough for you, I mean, I don't even know what to say. Like, just be fair, man. Leave a couple Bitcoins for the rest of us. Edward, what's up, man? Good to see you, brother. Welcome, welcome. Peter says, yes, when I watched it, was seeing it as confirmation. Exactly, man. That's the beauty of it. Like, the more people that seeing what I see, what we talk about together, the more likely it is to play out. And that's what it's all about. That's what we want. If we just see it by ourselves and nobody else sees it, it's pointless. Even if we're right afterwards, we're like, look what we saw, and we were right. Ha! But it's useless to everyone but us. If everybody sees it, we get that hive mind effect, and then we can take over the world. And that's what it's all about. And then we get the Citadel. We all chip in on the Peter Schiff statue, mocking him from Mars. We can find the first Tesla that Elon launched into space. We can avoid the China super nuclear rocket. I don't know if anybody saw that video, but that's crazy. All that good stuff. So we build the Citadel. Maybe the Citadel is a giant spaceship. Maybe we're thinking small. We're thinking Bitcoin's going to 1 million. Maybe Bitcoin goes to 1 billion each. And then we all chip in and we build the Citadel. But instead of the Citadel being on Earth where we live, and then all the little peasants live outside and they don't have any corns and we have all the corns and we're like the master race, maybe the Citadel is a giant spaceship. Maybe we all get on it. Maybe we all fly to Mars. Maybe the Citadel is just a giant like Dr. Evil spaceship, but instead of it being Dr. Evil, it's just a giant Peter Schiff spaceship. And we all just mock him with this. I mean, maybe we make it out of gold because gold is a good conductor of heat. I don't know. I can't tell you that stuff. I could give you a road to it, but I can't use technicals. But I can tell you how we get there with the actual technical analysis. And that to me is much more useful. Do I want to one day live in a Citadel with all my Bitcoin friends, and it's a giant spaceship shaped like Peter Schiff made out of gold? Yeah, that sounds awesome. It sounds really cool. Yeah, let's do it. Matter of fact, I mean, trending on Reddit. Peter Schiff, golden spaceship, Bitcoin Citadel. Let's do it. Peter says, does the limited supply on exchanges play a role? Does the limited supply? Well, it decreases liquidity, therefore it increases volatility. So we have to be very careful. As the Bitcoin supply is limited on exchanges, say there's, 1,000 Bitcoin on exchanges total. If somebody wants to buy that Bitcoin up and there's only 1,000, it's going to be, the price is going to go parabolic if there's more demand than supply, obviously. So if there's no sellers and there's enough buyers, price will just go parabolic. But it can happen both ways as well. If there's no Bitcoin on the books because there's no Bitcoin on exchanges, and then people start selling into it, you can have like that effect to the downside. But usually if there's more money on the exchanges and less Bitcoin on the exchanges, you're going to have plenty of buy orders if Bitcoin drops, but no sellers for Bitcoin to go up. But the fact of the matter is, people don't like to talk about it and it hurts people's feelings, but this Bitcoin futures is terrible for Bitcoin. Bitcoin futures ETF is terrible for Bitcoin. Why is that? It's instead of people buying the spot underlying, they're saying, well, I want some exposure to Bitcoin, but I don't want to have to worry about keeping it safe. I don't want to have to worry about it getting stolen. I don't want to have to worry about that. So I'm just going to bet on the price instead. So what does that mean? It means, essentially what it is it's the same reason that everyone hates on gold. And they say the gold hardcore cult says gold won't go up is because paper gold. Everyone has heard of people talking about physical gold and paper gold. Well, the physical gold is the actual underlying asset. That would be the equivalence to buying actual Bitcoin and having the private keys yourself. Okay. And then paper gold is a derivative. What is a derivative? It's basically exposure to the price action without exposure to the underlying asset. So what are you doing with a derivative? You're betting on the movement of the spot price or of the underlying asset without actual exposure to the asset. So that's why people say buy physical gold, because if there's a world-ending event, you won't be able to get your gold. You'll just be able to get a paper contract fulfilled in cash, but the cash will be useless because you can't get the gold, and then gold will go parabolic. Well, it's the same thing with Bitcoin. All these different derivatives that we build on top of Bitcoin stops people from actually buying Bitcoin. The same way that all these shitcoins stops people from buying Bitcoin. If there was literally only Bitcoin right now, Bitcoin's price would be much higher. But because there's Shiba Inu and Ethereum and all these other cryptos, the market cap is diluted. So Bitcoin's total market cap is, $1 trillion, but all the other shitcoins are $1.5 trillion. So imagine if just all 2.5 trillion of that was in Bitcoin, or imagine if 1.5 trillion or 2 trillion or 2.2 trillion or 2 point whatever trillion, Bitcoin's price would be much higher. So as there's more and more derivatives built on top of Bitcoin, which is what those futures contracts are, which is what anything but like, a purchase of actual Bitcoin or an ETF of physical digital Bitcoin, where they actually just go out and buy the actual Bitcoins and then custody them, and then you get exposure through those actual Bitcoin. Unless that's the case, there's no increase on the exposure to Bitcoin. So there's more money in the space, but it's not actually affecting the Bitcoin price the way it would if you just went out and bought Bitcoin. So the problem is everything people complained about, the manipulation, the paper contract, all the stuff that eventually, quote unquote, ruined gold or ruined gold's volatility or fudded gold so it doesn't go up anymore or whatever, all that stuff now is being exposed on Bitcoin. We're getting more regulation, we're getting derivatives, we're getting, all these other things that are bad, that are no good and have never worked out good, in history. Now all those things are the same thing that the Bitcoin cult and the crypto cult are getting excited about. So it's literally like counterintuitive of what the argument for Bitcoin was, which that's fine. Bitcoin evolved. It was supposed to be, it was supposed to be a peer-to-peer transaction, but it's not anymore. It's not. It doesn't work. It doesn't work. It's too expensive. Nobody wants to sell it because it's always going up. So now it's a store of value. That's fine. It's not what it was supposed to do, but it still works. Same thing with derivative contracts. Maybe all these derivatives are good for Bitcoin in the long run, but maybe they decrease volatility. Maybe there's, now people can bet against Bitcoin price without actually owning that Bitcoin. The same way that a leverage exchange can create downward pressure on Bitcoin is the same way that paper contracts, which don't even have exposure to the underlying, nobody owns the Bitcoin, and yet they're going to sell it the same way that you would essentially like naked short a stock like we were talking about. So that's what we have to pay attention to. That's what is not good about this situation. A Bitcoin futures ETF is letting people bet on the price of Bitcoin, but without buying that Bitcoin. So imagine if I just said, I'm bullish on Tesla, so I'm going to buy Tesla stock. And then I say, I'm bearish on Tesla, so I'm not going to buy Tesla stock. That's the only two options when there's just buying and selling. And then you have leverage position where you say, I'm bullish on Tesla, so I'm going to borrow stocks from someone else, and then I will pay back the money later on. So you basically, borrow money from the other way around. I'm going to borrow money from the exchange, and then I'm going to buy Tesla stock, and then I'll pay back the money I owe later on. But I'll have the extra exposure. I'll have the leverage exposure of Tesla to the upside. And then the alternative of that is that you have your Tesla stock on the exchange. Somebody borrows your Tesla stock, sells it into the market, and creates downward pressure without owning the underlying. So they borrow your Tesla, they pay you a small fee or interest rate, funding rate, etc. They sell the Tesla, and then they're going to buy it back cheaper because they're bearish on it. So now if you have buyers of Tesla and then people borrowing Tesla to sell it, that's the way that you have initially, exposure to the downside without owning spot underlying. So now the multiplier effect on top of that is to now say we have people on top of that don't own Tesla stock, they haven't borrowed Tesla stock, and they don't own Tesla stocks. So they have no actual exposure to the asset. But now we're going to create futures contracts where people can speculate on the price without affecting the actual, supply and demand of the initial asset. So in the situation one, I buy an actual Tesla stock, that's bullish pressure on the price because that's one less Tesla stock somebody else can buy. If somebody else borrows a Tesla stock from exchange and then sells it and then wants to buy it back cheaper, whether they're right or wrong, they're using my Tesla stock to create selling pressure. When there's a futures contract, or a derivative built on top of something, it's literally just Tesla stock is going up and down, and then there's two completely unrelated people on the sidelines making bets to each other. I bet it goes up. I bet it goes down. And then they're trading with each other, but does not affect the actual supply and demand of the underlying asset. So what can happen in that situation? Those two people can bet so big and the market can see it that it can push the price up accordingly. Those people can bet, so big to the downside that it can push the price to the downside. Either one of those is a possibility. But the difference is that you're taking the actual supply and demand out of the equation with a futures contract, with a derivative. There's no actual buying pressure coming in or no actual selling pressure coming in. So that's where you end up with a situation like, gold and silver, where people are speculating on the price, but you're seeing a gap between what you can actually buy the underlying for and what you would have to pay, basically like a, the premium to purchase like physical. So it gets extra complicated when you add in all these derivatives. And the fact of the matter is, if there's no derivatives, but there's leverage, it changes the supply demand function slightly, but the people have to at least borrow the asset to sell it. So somebody has to borrow it to short it. The same way somebody can borrow money and then just buy more of it. They're leveraging to the upside or leveraging to the downside. But once you start just betting on the price, you have people just strictly speculating without creating supply or demand. That's when you can end up in a situation where you have basically like people paper trading gold, where large buys and large sells can affect the price. But in all actuality, you've taken the demand and supply and demand out of that. And that's what they say, okay, if eventually CME or London Metal Exchange, one of them defaults and you can't get physical delivery, you buy up all the silver squeeze happens, they fail to deliver, they default, and then they just give you money instead. That's a possibility. It's definitely a possibility, but the fact of the matter is that's only possible with derivatives. If you're actually trading a physical asset, there's always going to be enough of that asset. The more derivatives there are, the more false supply there is. So if there's only 21 million Bitcoin, but then there's all these extra derivatives on top of it, well, who cares if there's only 21 million? Because there's only so much gold in the ground. So the more derivatives we create on top of it, the whole entire gold market is, I can't remember the actual numbers, so don't quote me on this, but the actual physical gold supply and price of that supply at current market is let's say 3 trillion. But if you add up all the gold derivatives and all the value of gold in all the derivatives, the contracts, all the paper, everything, it's 10 trillion. So if there was, say, 21 million Bitcoin, but then the derivatives end up in a situation like gold where the derivatives are 3 times the Bitcoin, there might as well be 63 million Bitcoin. Because there's 21 million real Bitcoin, but then there's 62 million worth of Bitcoin that people are speculating. So that's my point about how all these things that people are cheering on and saying is great. We want regulation. We want Wall Street involved. We want derivatives. We want futures. We want an ETF. All these things that people are cheering on are bad. They're bad for Bitcoin. The actual purpose of, and I'm going to keep going with technical analysis because you guys probably know a lot of this, but this is our rant for the stream or educational rant, whatever. The actual purpose of a futures contract, the reason they created futures contracts was for like farmers and stuff like that, like cattle farmers, wheat farmers, etc. You basically own this farm and you know that you're going to have a certain amount of wheat for sale in the future. So you basically lock in that price because say for instance, right now, everybody's harvesting all their wheat right now. So if you go and sell all your wheat, you're going to get a certain price. But if you sell that wheat later on in the future, maybe there's going to be less demand, so you can get more wheat, so you can guarantee that better price in the future if you wait to sell it. But in the meantime, you have carrying costs, you got to store it, you got to, maybe locusts come through and they kill your crop, and then, that drives up the price in wheat and all. There's all these different things. Or maybe you need to sell a contract in the future saying, I will deliver this wheat to you in 2 months. I don't have it right now for you, but I'll give it to you in 2 months because I need to use this money to, plant my next field so that I'll have soybeans that are ready, or, to hire extra workers for like this. So that was the purpose of that. And that you actually like had the asset itself or delivered it. And that's what happened with the oil situation. When we had the CVD dump and oil went negative, that happened because you not only had people using actual oil futures for what it's for, but you had speculators on top of that. So what happens is, as you get close to like forced delivery, because that's people buying real physical barrels of oil. And as you get within a certain amount of time of the maturity of the contract, if you are not registered for delivery, you can't actually take delivery and you're just a speculator, depending on what exchange you're on or your broker or whatever, you have to be out of that contract by a certain date, a week ahead of time or whatever, to make sure that you don't get stuck with a contract that you can't take. Because like an average person speculating on oil cannot take physical delivery of oil. They don't have the ability to, take that oil and put it somewhere. They don't have a storage facility. They don't have any of those things. They're not registered. They're not able to, do that legally or physically. So that's why the price dumped. All of a sudden, all the speculators were out because it was so close to maturity. And then there was a bunch of freighters parked that were all full of oil. Everybody wants to unload all that oil so that those boats can go back and pick up new oil and keep doing what they're supposed to do. But in the meantime, all of a sudden, nobody's buying oil because everything's closed. Everybody's locked down. Nobody wants gas. Nobody's building anything. All the machines, all the, industrial stuff, it's all shut down. So the demand has gone to basically zero. The supply is still there and waiting. And then people start dropping the price because they're just trying to get rid of it so they don't get stuck with the oil, knowing there's nowhere to put it. So as the maturity of that contract comes to date, people are like, oh shit, I got to get rid of this contract now. And then the price starts thumping. And then everybody else that was like, oh, I was going to take physical delivery, but maybe I should actually get rid of this contract now because it's going lower and lower and lower. And then you have, stops getting hit and this whole capitulation level, like liquidity event. But in the actuality, what was it? It was people unloading contracts because there was nowhere to put the oil. So that's how like the actual futures and then speculation on top of that can lead to these crazy unexpected events. Am I saying that's going to happen in Bitcoin? No, I'm not saying that's going to happen in Bitcoin. Honestly, right now, there's a lot of people speculating on the price, but most of those people are speculating one way or another with like spot underlying. There's not enough derivatives right now on the market to affect that. But there are situations in the future where that could be an issue, where derivatives could drive the price up exponentially to, $1 million or drive it down to 1,000. And then one of those two situations or both of those situations play out because of derivatives that would have never happened in a spot market normally. So, but anyway, that's enough on that. Hopefully I answered some important questions. Yeah, exactly. Somebody could literally dump. Yeah, I mean, imagine, Peter, imagine if like all of a sudden, there's movement on Satoshi's wallet. everybody sees it on the blockchain. That's on the news. Everybody's like, Satoshi's wallets have been moved. The coins, they're moving. And everybody knows Satoshi has so many million coins. And then it's like, oh shit, if there's movement now, all of a sudden, that can only mean one thing. They're going to move to an exchange and sell. Because why else would he move them? So that's going to create, potentially a FUD, FOMO, whatever event where people want to sell because they want to beat the movement of those coins onto an exchange where they're anticipating that they're going to sell. So something like that, or legitimately like, somebody just starts selling 1 million coins or, thousands of Bitcoin or whatever. That could easily drive the price down in the same way that if literally everyone who owns Bitcoin, literally right now, all the exchanges, all the people, everyone that owns spot underlying just says, I refuse to sell my Bitcoin. And then all the books are just empty. There's no sellers on any of the books anywhere because nobody is willing to loan their Bitcoin to someone else to sell and no one is willing to sell their own Bitcoin. So everybody just says, nope, I'm not selling, diamond hands, and pulls everything off the exchanges. Then the price of Bitcoin would go parabolic because any price that somebody tries to buy it at, there's no sellers. So it just drives the price up, drives the price up, drives the price up. And then finally Bitcoin price gets to $1 million and somebody says, you know what? I'm going to go ahead and sell one of my Bitcoin now at $1 million. And then that order finally gets met. And then you can start to see that locks in the price, the market cap, that becomes like the new trading value of Bitcoin. But in the meantime, if literally no one's selling, the price just goes straight to the moon. It goes absolutely parabolic because everybody's like, I'm not selling. The price is just going up. Why would I? And that's what's going on in the housing market right now all over the world. People are saying housing went up 20% this year. It's probably going to go up 20% next year. Interest rates are extremely low. Prices are only going up. Why would I sell? So all these people are not selling now. And then all these other factors are limiting supply as well. So it's creating basically like a giant short squeeze in the housing market. So, all right, well, that's enough. That's enough of that. Let's keep running through here. I'm going to do everything else a little quicker just because we went into such a long explanation of all that. But, I think that was crucial. I think it's important to keep in mind ridiculous targets to the upside and ridiculous targets to the downside because more often than not, those ridiculous targets eventually get hit. But yeah, let's look at Ethereum next. Ethereum, same thing now. It's basically, it has underperformed Bitcoin for some time now. And now here it is back doing the same thing Bitcoin is doing. We closed at previous all-time highs right here on the daily / weekly. And now here we are pushing up. We haven't quite taken out the previous wick yet, but we're $150 away or whatever. So maybe now Bitcoin dominance starts to sell off, find support at the 821 on the weekly and hangs tight. And then altcoins run up a little bit. Maybe just Ethereum does. Maybe some of the shit coins do. But Ethereum, kind of just breaks out. We'll have to wait and see. But we're looking for opportunities. The goal, the main reason I trade most of these altcoins is to either make more Bitcoin or make more actual money that I use to pay my bills with. I don't actually do anything with Bitcoin. I don't have a use for Bitcoin. So other than just holding or accumulating Bitcoin that I can say I have this much more Bitcoin, I can't pay my bills in it. I can't buy houses in it. I can't buy cars in it. I can't buy the things I want. So in all actuality, my goal is to gain wealth, but I do that through exposure to cryptos. So what we're looking for now is, I might trade SHIB. I might trade Matic. I might trade Ethereum, but do I want to own those? Do I want to have underlying? Do I want permanent exposure to them? Well, maybe not. Some more than others, obviously, So Ethereum looks good, looks strong, doing very closely what Bitcoin's doing, getting ready to cross the 200 exponential again at higher levels, not as bad. Potential of, divergence situation happening doesn't look bad. If we see continuation or just consolidation, I think this will be fine. I like how Ethereum looks. Now let's look at the Bitcoin Ethereum chart. It's exactly what we talked about. We were, obviously we had our breakout way back here. We're bullish on Ethereum on the way up. Then we're bullish on Bitcoin in relation to Ethereum. Then we're bullish on Ethereum again. Then we're bullish on Bitcoin in relation to Ethereum. And now here we are bouncing the 200 exponential and simple. We would expect this to be a bottoming point, at least temporarily. So now we would expect to be bullish on Ethereum. And then eventually we'll see it come back down. We'll be bullish on Bitcoin. But this just tells us, the same way the gold-silver ratio chart, do we want our exposure? If we're going to have, $1,000 in exposure to crypto, and we're deciding, do we want that 50-50 in Bitcoin and Ethereum? Do we want 90 in Bitcoin, 90% Bitcoin, 10% Ethereum, or 90% Ethereum, 10% Bitcoin, this chart tells us where we want to move those percentages around to. So right now, you could argue that as we're bouncing the 200 exponential and simple, as we're putting in potentially bullish divergence, here we have a low, here we have the same low. Let's look at our Stochs. Here we have a low, here we have a higher low, and then let's look at our price action. Here we have a low, here we have a lower low. So we have bullish divergence on our ETH to Bitcoin chart at the 200 exponential and simple, and then now we're getting a movement to the upside. So what does that tell us? Well, the bullish divergence tells us that this is an unsustainable trend to the downside. Ethereum is unlikely to continue losing value compared to Bitcoin. And there's a divergence taking place. It's losing value compared to Bitcoin faster than it should be, and that trend is unsustainable. Therefore, what do we expect? At support, at the 200 exponential, at the 200 simple, off of the bottoming pattern, the hard buy, the multiple green histograms, we now would expect Ethereum to push up here and gain value in relation to Bitcoin. So if I was say when we were going down here, 75 Bitcoin, 25 Ethereum, now I might want to switch to 50-50 or maybe 75% Ethereum, 25% Bitcoin. So this chart right here, coupled with what's taking place on the Bitcoin chart, tells us, and the Bitcoin dominance chart tells us what? It tells us that short term at least, more likely than not, Ethereum will outperform Bitcoin. And then we can look at time cycles and we can say, okay, this was May of 2021. And then, this was when we started breaking out, moving back to the upside. That was July of 2021. So we have May to June, June to July. So 2 months downtrend here. And then we have from, July 2021 till when did we top out in here? September. So we have, wait, did I say that right? Yeah, okay. So we have essentially a couple months of a downtrend, a couple months of an uptrend, and then here from when, let's say from when we topped out here or when we broke down from support, now we're mid-September till, mid-October. So we have 2 month downtrend, 2 month uptrend, 1 month downtrend. So now what are we going to have? Maybe a 1 month uptrend, and we're just going to start flagging out. We're going to start putting in, a discernible flag pattern where we essentially put in lower highs and higher lows. So then at that point in time, what are we going to look for? Well, it's going to be a tightening range for a certain amount of time that we don't know right now. But we're going to continue trading inside this range for a little while. And then eventually, this is typically a bullish pattern. Typically. Now, could it push down a little lower and then it turns into more of a descending, triangle? Could it flatten out and come back up here and, actually turn into like a channel? Sure. I mean, so it's hard to tell, is this going to be bullish or bearish? But we know that we have key levels identified now. And as long as we're at the bottom of the level, as long as we're at support here of the triangle and at support of the 200 exponential and simple, as long as we're putting in bullish divergence, more likely than not, Ethereum is going to gain value in Bitcoin. How much Ethereum going to gain value in Bitcoin? Well, it's probably going to gain about 25%. Compared to Bitcoin. So once we get back up here, then we're going to say, okay, we're back up here at resistance. We're putting in maybe some bearish divergence now. We're at a key fib level. For whatever reason, we start saying up here, okay, now we want to move back to 50-50, or maybe now we want exposure to Bitcoin and less exposure to Ethereum. And we're just basically trading the range between the value of Bitcoin and Ethereum without taking into account the total overall price of Bitcoin or Ethereum. We're just looking at the relationship between the two. And again, that's going to give us a clue, because right now we know that based on this, assuming we continue trading inside the range, which you guys know how I feel. If we're trading inside a range, we're more than likely going to continue trading inside that range until the one time we don't. Because we're only going to break out of this pattern once. And then when we do, we expect continuation in that direction, up or down. So this tells us that likely Ethereum's going to gain value compared to Bitcoin. So what is that going to mean? It means Bitcoin's going to sell off while Ethereum sells off less. Bitcoin's going to go sideways while Ethereum goes up. Or Ethereum's going to go up faster than Bitcoin goes up. Or Ethereum goes up and Bitcoin goes down. Any one of those is a possibility. But all these tell us that we want to be in Ethereum now compared to Bitcoin. So what is the most likely situation? The most likely situation, in my opinion, is Ethereum breaks out from its all-time high and then starts running away. That's what I think is going to happen. I think Ethereum is going to move, to 5,000 while Bitcoin goes sideways. So Ethereum gains 25% of its value. It's at 4,000. It goes to 5,000. or it's at 4,300, it goes to, 5,100. Meanwhile, Bitcoin goes sideways. But if Bitcoin goes up slightly, say Bitcoin goes up 10% and Ethereum goes up 25% compared to Bitcoin, we now have basically Ethereum going up 25%, plus it has to go up a couple extra percent to make up for the 10% that Bitcoin went up as well. So maybe, without looking into it crazily, let's say Ethereum goes up 30% or 32% while Bitcoin goes up 10%. But the fact of the matter is, this chart is telling us Ethereum is about to outperform Bitcoin, and we expected that. We expected it. So even though, we saw Bitcoin moving up and breaking out first, we now expect Ethereum to break out and outperform. So that's why this chart is so important. And then also the Bitcoin dominance gives us the broader spectrum of Bitcoin in relationship to all the cryptos, etc. So, but yeah, okay, so perfect. So we got our Bitcoin chart, we got our Ethereum chart. Let's look at some shitcoins, Shitcoin Connect. If you're just tuning in, also, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And you know what? I never do this, but I want to real quick mention, if you are not part of the trade group and you're interested in the trade group, reach out to me. We just put out our 10 under 10 video. I picked out 10 stocks. Well, really it was 11 and a bonus kind of like one. But it ends up being 12 stocks, all under $10. That I just put out, and in a couple different sectors, a little bit of tech in there. I'm not going to tell you exactly what they are, obviously, because it's one of the perks of the group, as well as the TJD Master. But literally 2 of those stocks today were like the top performers in the market. Well, not top, but very high performers. We saw one of them run 20% today. We saw the other one run like 10% today. Since I put out that video, on average, they're up between 5 and 20 something percent. And, in the last 2 or 3 days. So if you're not ready to invest in yourself and look into this stuff and actually figure out, how I'm doing all this, take the extra step to help yourself, then, I don't know. I don't know how to help you. We put out all this extra stuff, explain everything. It was an hour and a half long video. I talked about the technicals, the actual charts. I talked about the fundamentals, valuations of these actual companies, why they were undervalued, why they were overvalued, where their potential was, targets for a double, a 10x, etc. And that's the most important thing, is not only just having someone say, buy AMC because there's a squeeze coming. No, you want to buy this because of this, and the valuation is this, so there's a likelihood that if you buy it here, this target will get hit, etc. So, anyway, it's open. There's spots in there. Always looking for new members to people that are wanting to learn, not just get picks. Because you can just go on Reddit and buy SHIB or AMC or whatever the new shitcoin stock is. So, but here we have. Let's jump into it. Is this the one you asked me for? Oh yeah. Okay. Nervous Network. I don't even know what this is. Nervous. This was one of the member requests. Let's take a look at Nervous. I jumped in. KuCoin was the one I saw with the most history. But I'm sure there's probably a better one. But at this point in time, well above the 200 exponential and simple. On the daily, we have taken out the daily close right here, which is good. So now we have a low, we have a high, we have a higher low, and now we have a higher high. So at this point in time, I would say we are in a short-term uptrend of the downtrend. So what we want to do is we want to take the low, we want to take the next low, and then we want to go to the high and then look at how that's trading pretty technically. So we have obviously a low here, a higher low here. We have our high here. We have a slightly higher high here. And then now we would expect this to come up here and probably close somewhere around 2.5 cents. Which point in time we would expect it probably to top out and come back down. So then if we look back here a little further, we have a close back here at that 2.5 cent level, 2.2 cent level, just above our heads. So we took out this little high right here. So now the next main area we want to take out is this low or this high right here. So once we take that out, we'll probably be able to close around the top. And then eventually we'll continue probably just chopping around inside this channel, but eventually we'll get the break in one direction or the other. So assuming that, Bitcoin sees follow through and continuation and we break to the upside, assuming that, all the little shit coins come along the way and get to participate in the rally as well. I would expect the measure move, which is from the bottom of the channel to the top of the channel. Let's assume we just come up here and then we get the breakout. The measure move would essentially take us back to roughly the previous all-time high. So that's what I would be looking for. And then if we just do a Fibonacci from the top right there to our, everything's like super thick because I did that chart earlier. Thanks, TradingView, for always saving the shit I don't want you to save and never saving the shit I do. So that's from our high there to our low there. So we know we came up pretty technically, got rejected at the 0.5, came back down perfectly to the 236. So resistance at the 382, came up perfectly to the 0.5 again, came up to the 618 now. So now I would expect to close roughly around 23 cents. Obviously, this is trading very, very technically because even before we knew this was going to be the low, look at how technical this is. It's no closes below the 0.5. Finding support clearly at the 618. Could not get back above the 886. Multiple wicks coming up perfectly to the 786. So the bots and the algos knew this was the target before it ever happened. They knew this was going to be the bottom before it ever happened. The same way I was talking about Bitcoin target, the bots and the algos knew that was going to be at least a temporary top before it ever happened. So we have basically a 1, 2, 3, 4, 5 waves to the downside, essentially, or something to that effect. Is it completely valid on a daily? Well, not quite. Maybe there's like a little overshot on the retrace right here, but essentially this looks like a 5-wave correction. Typically we would want to see this peak not come any higher than that peak right there. Maybe if you go to the weekly, like a little longer of a time frame, it looks a little more technically. Maybe it doesn't. I don't know. I haven't actually looked at it. Yeah, look how technical that is on the weekly. This is my perfect example of why these 5-wave Elliott wave structures are so important. Because if we look at this right here on a long time frame, the retrace from the 1 and the 4 should not interfere with each other, basically. They should not overlap by more than a wick on a longer time frame. So we're on the weekly, and essentially the bottom of the 1 right here, then we have 2 pull back, then we see the 3, then we want to see the 4 come up only to the bottom of the 1. So essentially that was where the candle closed. That was our red line right there. So this is a very technical, 5-wave structure on the weekly. A little less technical on the daily, but we can see whoever the market makers are in this random shitcoin that I've never heard of, that probably is just an amazing project that I wish I got in on at a lower price. They're obviously, the market makers are using technical analysis. They're using the same bots and algorithms and the same techniques that we do. We just do it with our brain instead of a machine. So what do we expect to happen now in the future? Well, we expect it to continue trading technically. So now that we have a good idea as to what's taking place and why, we can use that to our advantage. So again, once we broke above that key technical level on the weekly there, we consolidated top of it, sold off, found support at it, we would expect this probably to hold up. So what I'm looking at now is, we come up here, probably going to close somewhere at or around the 618, slightly above our heads, and then maybe that's when we get the break. And then the break, the extension, the measure move of the actual channel itself will take us up to the 886. Now, is that going to be a macro top? Does it get up to 3.7 cents? Does it get up to 3 pennies and 7/10 of 1 penny? And then that's its macro top, and then it never goes higher again this entire run? Maybe. Does it get up there and then consolidate and then put in a new all-time high? Maybe. We don't know that. But short term, we know there is a very high probability that we're going to see at least a micro top somewhere between 23 cents and 25 cents, at which point in time we would expect it to continue trading technically inside the range, but more than likely it would break out to the upside if everything else is bullish. Now, technically, this is a bearish sell-off in a bullish pattern, and then we would expect continuation back to the upside. But when we have a rising channel like this, it's not uncommon to see a breakdown of the channel to take us either back to the same low for a double bottom or to a new low before we see continuation to the upside. So maybe what's actually taking place right here is we have, and again, this is just, and I promise I'll actually look at more than 3 things today. We have basically this taking place. We could have a flat correction taking place, where we just double bottom. We could have an A, a B, and then a C correction taking place before a continuation to the upside. But what is this? Inside of our A, we have 5-wave sell-off, and that's the completion of the A. So maybe now inside of our, B wave, we're going to have a 5-wave, to the upside. Or maybe we're just going to have, a 3-wave to the upside. We'll have to wait and see. But oftentimes when you start breaking this stuff down, you can see the patterns playing out. So what are the possibilities? Well, maybe this tops out where, roughly around here. Maybe it gets all the way back up to the 886. And then once it does, maybe it comes down and puts in a higher low somewhere around this range. Maybe we get a flat, basically a double bottom correction and then continuation to the upside. Maybe we put in a new low and this thing capitulates into a bear market. We don't know what's going to happen right now. But based on these levels and how it's respecting those levels, we know that we're very close to the 618, and the 618 is very close to the top of the range. So right now, if we put, say, a trade setup into place, say you just wanted to buy into this right now, there's not going to be a good trade setup. Because when do we know we're wrong? We have to invalidate the channel, basically, which is our support level. So that's 36% to the downside. What's our potential top inside of the pattern we're already in? 23%. So that's a reverse risk reward. We don't want that. It's terrible. Even if you said, well, I'm sure it's going to break out, but if I'm wrong, it breaks down to the bottom of the channel. Even if it remains in the range but doesn't break out, that's only 70% to the upside and 36 to the downside. So that's a 2-to-1, and that's assuming that we start breaking through all these. So this is not, there's no good trade right now. But in the case that you're already in this trade, which I know you are, he who requested this crypto, more than likely, what I'm thinking is this probably going to top out around 26, 27 cents temporarily. It's probably going to pull back and find support around where it's at now, around, I'm sorry, I said 20 cents, but I meant 2 cents. Divide everything by 10 and then multiply it by 1.618. No, I'm just kidding. If I say 26 cents, I mean 2.6 cents, or if I say dollars divided by 100, you know what I'm saying though. I think more likely than not though, we will probably touch, 2.6 cents, and then we'll probably consolidate above 2 cents, and then eventually I think we'll head up to 3.6 cents. More likely than not. When would I start being worried about this? Well, if we break down below, and if we look at this extended out just a little bit further, if we break down below the 382, that would be a break of our next highest fib level, which here we have the 0, then we have the 236, so we would expect our next bottom to be the 382. If we break down below the 382, we have to be careful because now we're retesting that higher low, and if we break down below that, we're potentially retesting our lowest low, and then we're probably going to get continuation to the downside or that double bottom. But what also lines up is the bottom of our higher lows and that Fibonacci. So to me, if and or when price action sells down to this level, that's a buy for me. That's a technical buy because there's a bunch of support there, and more likely than not, if this is going to continue to the upside, we'll have the 200 exponentials will be right around there. We'll have the 382. We'll have the bottom of the channel. And then again, in the same sense, more than likely, the 618 or the top of the channel where we're at right now is probably going to be a sell. So we're at basically the top of the range with quite a bit of potential to the downside. Now, is it possible we consolidate here and then we move up to the 786? 100%. And again, more than likely, that's going to be our next resistance where we would be potentially looking for a sell. And then finally, assuming we just broke out right here, got the measure move, took us up to the 886, that would obviously be like where we would want to potentially exit our next portion of the position or take profits or, at least once we reach that level, move our stop loss up, whatever the situation is. But those are our key target areas. And the fact of the matter is we're closer to the top than we are to the bottom. But more than likely, we're going to continue just trading inside this range, slowly creeping higher. So, but again, if Bitcoin starts topping out here and we start consolidating, maybe it rolls back over, then this is a buying opportunity. Then we come back up to the high, etc. But this is trading very, very technically. So the most important thing, the most important levels, in my opinion, are these Fibonacci's and then this key red support / resistance, which was obviously the top of the 4, bottom of the 1, or bottom of the 4, top of the 1, depending if you're standing on your head or right side up. So, but yeah, that's it for nervous network. Right now, I would not be nervous in this. I mean, you're probably up pretty high, and yeah, but I also would not be entering at these levels either. So, All right, let's look at some other shit coins. FTT looks pretty good, consolidating at the previous high right here. We do have to be careful that this is not going to be a topping area, but we did take out this little high right here. So again, we have higher lows, we have higher highs. That's good. I don't know what's drawn on here. We have some random Fibonacci's in place. So again, the one right here, that's our previous all-time high, broke through that, back here retesting it. And then also from our top right here, we came down technically perfectly to that support right here, was resistance, now acting as support. Support again for our higher low, and that also lines up perfectly with our 382. So here we are at the 236. So now, where do we expect this to go? We expect it to either go back to all-time highs, which would be a move back one Fibonacci back to the upside, which would, basically just be a retest of all-time highs, in which case maybe we go to the moon, or we would expect to pull back again to the 382, which would basically just be a slightly higher low than right here. So since we already pulled back to the 382, since we're technically at the 236, again, we're right in the middle. So, if we put, once again, just a trade setup in place, what are our potentials? Well, if we revisit the all-time highs, it's 37%. If we retest the lows, it's 17%. So you could argue, there's a 2-to-1 risk-reward ratio. So if there's a 50% chance that it retests all-time highs and a 50% chance that it retests those lows, you get paid $2 for taking that bet. If you're right to the upside, you lose $1 for taking that bet if you're wrong to the downside. So assuming it's 50-50, still a 2-to-1 risk-reward ratio, might not be a bad idea for somebody to buy right here. Would I buy right here? No, I don't. I typically don't buy into resistance. If we start consolidating here long enough, sure, whatever. But again, we're seeing a little bit of momentum building up. We are above the 200 exponential on simple. The 200 exponential is getting close to crossing above it. But could we very, very easily just come down here, break past the 382, take us out of the stop loss, and then come down to the 0.5? Definitely could. And that's another 20% to the downside. So, that would basically ruin what amounts to a 2-to-1 risk-reward ratio, which is why we would want the stop loss in play. So, but I mean, all these alts are probably going to zero. So, or the moon, 50-50. Could go either way. Flip a coin. Link's still looking very weak. A lot of these cryptos, a lot of the old popular ones are just consolidating between the 200 exponential and simple. Again, I said literally weeks ago, I expected this to be range bound, and since then it's been range bound. Cannot get above the 200 simple, cannot, or is not breaking below the 200 exponential. So again, I just expect this to continue inside that range until it doesn't. And then even when it does break, we don't know there's going to be continuation either to the up or downside. There's not a lot to be done right here. Technically, again, trading fairly technically, not nearly as much as some of these random shitcoins. It's actually trading much more based on our resistance supports than our Fibonacci retracements. So, and some of these smaller coins don't have as many market participants. So if just a couple of them are big holders and they're using these same techniques we are, it makes it so they're super technical. Like Matic is one of the most technical we've seen. And that was the same thing with whatever that one was we just looked at. CKB, whatever. Nervous. So let's look at our Matic chart here again. This thing is trading extremely, extremely technically. Same exact thing. We have our high right here. We have our low right here. And we see clear resistance and support based on these Fibonacci levels. Even before we knew where this Fibonacci level was going to be, we were already trading perfectly on those Fibonacci levels. So we expect it to continue trading perfectly on those Fibonacci levels. We may have a little overshoot, we may have a little undershoot, etc., but very technically. And again, it was the same thing here. Probably whoever was trading this right there was either probably already in a position from the 382 or was trying to stop people out, assuming that they had their stops or entries at the 382 before that push to the upside. And then where does it top out? Exactly at the 618. So then we come down, touch the 0.5. So if we break above the 618, we would expect the remainder of the trade to play out. And the 786 is our next area of interest. If we do not hold this area, we would expect it to come back down to the 382. So once again, just simply looking at this thing, and I'm not going to put a million trade setups in place for all these things. That's where we're looking for potential, take profit or, target, whatever. And then potentially, that's just the second portion of the trade setup we put in place. So the initial one was 26%. Next one is 70%. And again, this here shows the importance of, if you have the ability or the confidence or, whatever, using a hard stop versus using a, mental stop. If you had a hard stop in place right here, the trade setup invalidated. You got took out on that 6% stop loss before a 26% move, which sucks. But, maybe you were sleeping. You don't want to risk, losing 50% if this thing just capitulates. But that's why I like to use candle closes on either whatever time frame you're trading, a 4-hour or a daily. And I like to use, a stop in my head. I don't like to put my stop in the books and then just let the market wick me out and then do the move it was supposed to do, but without me. But it happens. I do put in hard stops sometime when I'm sleeping, or if I'm unsure about something, or if my position is too large and I don't feel like giving it back, or whatever. So there's definitely arguments to be made for everything, but Matic trading very, very technically. The old Polygon. Solana retesting the all-time highs again. Daily close above this level. I would expect just continuation. And again, we would just use the Fibonacci extension from the high to the low, which would give us our next target to the upside, the 1.236 up at 250, 1.618 at 317, and then a bunch of other junk in between. Does it get there? Is Solana good now? And before it was shitty and now it's really good? Is Solana just one of the most recent popular ones? Is it a good project but probably overvalued? It's up to you to determine that. I would say yes, it's a good project, but it's probably very overvalued right now, in my opinion. But I also bought it at $40, so of course it seems overvalued. Bought Ethereum at $85, so of course at 4,500 it feels overvalued. I mean, but hey, it is what it is. Fibonacci, Shiba Inu, Shiboshi, Shibcorn, whatever it's called. Can't keep up with all you kids and your crazy corns. Looks decent. Looks like it wants to come up here and retest the highs by closes, which is 3. I'm not even going to use the zeros. We're just going to use the first number that you see, and then you can just add as many zeros as you want before it. So next resistance is at 3. Support is at 2.5. And then obviously it's on top of the 8. So as long as it's on top of the 8 daily, it's going to look good. We are seeing a bunch of red histograms, but, overall, I mean, it looks pretty good. It looks like it's basically just flagging out. I would expect it to come up here, most likely. I think it comes up to 3, and then we basically just form like a giant ascending triangle, or some sort of flag situation. So just by closes I'm looking at right here, it looks like it wants to do, something like this, which would obviously be like a bullish pattern. And then you would, extrapolate either the flagpole or the meat of the flag itself for our breakout and our next target to the upside. So, okay, so this isn't actually at all-time highs right now. So yeah, I mean, realistically, the breakout would probably be a retest of the 886, and then after that, previous all-time highs. So how is this thing not at all-time highs? God, can you imagine if you were in this and it just lost 98% of its value in like how long? Oh, a couple of days. It was a couple of days. It's not like it just happened in one day. It happened in 4 days. Uni, another one of the ones that's just basically been range bound. It is sort of reclaiming the moving averages. I do expect it to run into resistance around $31. But again, a lot of these ones that were early movers and had like a little cult following, the cult members, they're not loyal. They're not loyal. This is not AMC. This is not GME. This is not, nobody really cares about Uniswap. And there's a lot of strong fundamentals why it sucks. The fees are unsustainable. Does not mean it's not going to be successful in the future. Just means right now there's legitimate reasons to think maybe this thing isn't quite working. So $31, that previous little double top right here. After that, a breakout to the upside, probably going to take us to like 34, 37. And at this point in time, it looks favorable, like that's going to happen. We have sort of like a little head and shoulders pattern going on here. So if we do break above that 618, just based on that head and shoulders, just the measure move back to the neckline, and then we just extrapolate that from the breakout, probably going, and look how technical that is, probably going to take us up to the 886. So I don't know that that's going to happen. It's not the most technical head and shoulders I've ever seen, but it looks fairly symmetrical. It looks fairly obvious, and it's happening. The neckline is happening at a key Fibonacci and then our left shoulder and our right shoulder are happening at a key Fibonacci / moving average, and then obviously the head as well. So in my opinion, based on how this looks right now, and that could literally change in a heartbeat, this looks like an inverted head and shoulders accumulation pattern after the sell-off, and then it looks like it's going to burst up to the upside, target being roughly $38. Am I going to buy the breakout? No, probably not. I'll probably just continue doing what I'm doing. But you could argue that, you know, obviously we're at resistance right now, so there's not a lot of, you know, area to... It's a tough spot. You buy into resistance and then the resistance gets rejected. You can't be surprised because you're at resistance. But, you know, 40% move to the upside, and then an invalidation would be if we took out that left shoulder and this would just look like a bunch of chop and not really like a symmetrical head and shoulders. Still a 2-to-1 risk reward ratio. So there's still an argument that you could take this trade. You take it enough times, you're going to succeed over time. You could also run a super tight stop loss, you know, up here at like 10% and get like a 4-to-1 risk reward ratio. But again, you know, we could end up in a situation like with Matic where you get stopped out and then it moves 40% in your favor. And you're like, oh man. Been there, done that. I think we all have. So, but overall, I think it looks like it wants to move to the upside here. So, but again, everything's just going to do what Bitcoin does. If Bitcoin starts double topping or consolidating, there's a possibility the alts run. But also there's a stronger possibility that they sell off, you know, but, you know, we can look at the Bitcoin dominance chart and it will tell us. And then we've got XRP. Oh man, I picked the worst one. That was so funny. I was cracking up in the group at that, guys. I forgot I had put that in the stream, but, so yeah, XRP. I mean, look, at some point in time, we got to just all get together. And we got to just have, what is that called? Where everybody gets together and you like confront somebody about like their addiction or bad habit or whatever. We got to have an intervention on XRP. At some point in time, you have to just give up on XRP and say, I could have just bought any other crypto ever and I would be doing better than I am now. And I think that that's probably the type of thing where I'm not the only person thinking that. And I'm thinking it for you guys. I've known. I knew for years XRP was trash. You could look at the circulating supply. You could look at anything and tell XRP is garbage. But the fact of the matter is, we are now nearing, if we're not at the end of the cycle, we probably only have 2 or 3 months left in this 4-year cycle based on Bitcoin halvings. XRP still has not put in a new all-time high yet. It is still not looking good. At some point in time, you got to just chalk it up and say, okay, if XRP continues to go sideways, I lose out on so many more gains. I've already lost out on so many more gains. At some point in time, you got to cut your losses and just buy some other random shitcoin. Join a different cult. Go, you know, if you're at your church or whatever, and you're like, this is an okay church, but doing some shady stuff, like, you know, maybe the preacher's getting a little too chummy with some of the, like, little altar boys, or, you know, maybe a lot of the people smell like booze that are sitting next to you. You know, maybe, I don't know what kind of church it is. Maybe they sacrifice a chicken one day and you feel a little uncomfortable. You start losing faith in, like, you know, your religion. At some point in time, you know, XRP fans, fanboys, cultists, they're going to lose faith. They're going to get tired of smelling the beers, or wondering why the priest is always breathing heavy around the little boys, or, you know, why they're sacrificing chickens. And that's okay. You can still participate in those things. Maybe you were drinking too. Maybe you're smelling your own breath. Maybe you're into that weird stuff. You're probably going to go to jail, you know, but that's fine. You can ride it to zero. But XRP, guys, it's time. It's time for the intervention. This is me reaching out to you. It's not financial advice. I'm not telling you what to do, but it's over. It's over between you. Just break up with XRP. Give up. Or maybe that was our wave 4, and the wave 5 is going to take us up here to $4.46. So it could be about to like 4x. I don't know. We'll see. Maybe. But probably XRP is going to 0. But maybe it'll go up. It is above the 200 exponential and simple. So next target to the upside, 786, $1.59. Next target to the downside, 63 cents. We'll see. But maybe just, you know, and you don't even have to quit going to the XRP church of cultists. Maybe you just go check out another church. maybe just dabble in one more crypto, and just see. Just see if you like it. Maybe you like it. BAT, basic attention token, looks very weak. Below the 200 exponential and simple. It is chopping away at the 200 exponential. A burst to the upside probably takes it to 81 cents. 15% move. It's not terrible, but this is very weak in comparison to the majority of the cryptos we've been focusing on are at least above the 200 exponential and simple. So very weak right now. Dogecoin, again, just chopping around between the moving averages. All the Dogecoin people have moved to the other Doges. 10% of them went to Baby Doge. 10% of them went to Shibu Inu. 10% went to Baby Shibu. 10% went to Unu Doge. Doja Unu Shibu. Some of them went to just Wiener Dog. A couple of them went into like Weimaraner. They're all diversifying into the other dog coins. Some of them gave up on dogs altogether, and now they're in Kitty Coin, or Moon Cat, or Cat Moon, or Moon Feline, or Doge Feline, or Philoge. I don't know, but let's be real here. Doge is done. Elon's got developers working on it, and it's trash. Dogecoin is trash. But there's always going to be people in the cult, so you can live and die with the cult members, but you're probably going to end up in an XRP situation with Dogecoin, but in like 4 years. ADA, Cardano, trying to reclaim the 8 and 21. A close above here on the daily is pretty much going to cross the 821 back up, and then we're going to start seeing it come back up here. Quite a bit of resistance at 233, but I realistically think you're coming up here to like 264, still well above the 200 exponential and simple. The only problem, the main concern I have right now with Cardano, is honestly, if I just break it down and I just use 2 words, the main overhead risk with Cardano that you really have to worry about is Charles Hoskinson. Charles Hoskinson he's a piece of shit. So, but other than that, not a bad chart. But do you really want to be on Charles? You want to be with Charles? Probably not. FTM. FTM looks good. All-time highs, breaking above, coming back down, retesting our technical breakout as support. I don't love hard buys at the top of the range, but overall, this thing looks like it's about to keep cruising. Again, I think we're very likely, we fell just short of the 1.382 of the previous high to low. Trading fairly technically. We see quite a bit of confluence with these different levels on the daily. I think we get up to my target. Had this target in place for quite a while. I think we get there between, and I should probably move this out further. And no, just so you know, in case you're new or you see me move these things, they're not time targets. They're price targets. I'll do time targets sometimes, but it's very difficult to do that. That's where like your options type stuff comes in, where you're looking for a price target and also a time. But typically when I put these targets and fib levels, it's time irrelevant. This could take a month. It could happen tomorrow. But realistically, I think this probably at least short-term tops between $2.71 and $3. And $3 is a very round number, even dollar amount. So I would say probably like, I think it hits $3 probably. So more likely than not. This one's much more bullish than most cryptos are right now. And if you ever see me looking at a chart and you're like, that's not the all-time high, there's a different chart with more history, please feel free to share that with me. Because to tell you the truth, most of these shitcoins, I don't even know what a lot of them are. I don't know anything about them. And I don't know if this is the best exchange to be looking at. Most of them are just requests, and I just pull them up here. So if you do ever notice there's better history or a relevant data point on a different chart or exchange, please let me know, and I will be glad to revise my technical analysis based on that. But honestly, I don't do a ton of homework. I typically just pick an exchange that I expect it to have a decent amount of history on, and then I go with that. So Polkadot still looks good here. I did take some profits at the $40 level. It is still rolling up here. Looks good. Obviously looks likely to hit. That was our 1.236 target. Looks likely to hit our next target to the upside, which obviously you guys know is going to be somewhere in between. Well, it tagged the 1.382 perfectly. I would expect it to find support at the 1.236, which is basically where we are now. And then I expect it to move up to 1.5 or 1.618. Let me just move that over a little bit, which is going to be, I would expect this thing to hit somewhere between $48 and $50. So, still definitely has some potential to the upside. But as for now, support on the previous top of the 1.236 seems very likely that will in fact hold. It's strong. Bullish control zone, momentum in its favor. Still looks good. Coinbase had the breakout we have been discussing, almost to our target. It took about months and months to get there, but like we've been discussing, we have the initial low, and we've literally just been putting in higher lows since then. It is trading very technically, respecting the fibs. Once it broke above this level here and took out our close, obviously that was an easy play. I do expect it to come up here eventually to the 618 Fibonacci extension of 325. This is just going to do what crypto does, what Bitcoin does. But I mean, the truth is, with this and then like MicroStrategy is, okay, Bitcoin is at all-time highs right now. Coinbase is not. So which one has overhead resistance and which one does not? Coinbase has overhead resistance. Bitcoin does not. So would I rather, if I was just going to buy right now, either Coinbase or Bitcoin, or Coinbase or Ethereum, or Coinbase or certain X crypto that's at all-time highs, I would much rather be in the crypto that's at all-time highs, because there's no sellers. There's no one to sell, because everybody that bought is in profit. So when you're in profit, you're not thinking, I got to get out of this quick. No, it's the opposite. You're thinking, I'm going to just keep riding this fucker because it's moving. Robinhood still looks weak, trying to cross 821 back to the upside. It's going to be tough, man. I think Robinhood screwed over a lot of people. There's a lot of FUD still with Robinhood. Were they in on it? Did they cheat? Did Citadel participate? Insider this, insider that. But honestly, right now, I think Robinhood's probably headed back to like 47, 48 bucks. So a nice little 15% move to Robinhood. In all reality, though, I think it's going to go up here. I really do. Do I like Robinhood? Do I like Vlad? Am I an investor? No, I don't use Robinhood. I don't like Robinhood, but it doesn't have me feeling any particular type of way, because I'm not in the GameStop cult. I'm not in the AMC cult. So it's no skin off my back. Like, corporation's going to corporate. They're going to do what they can to take your money. And it's just like, it's the politics. It's the politics of money. If you have a bunch of investors and they put a bunch of money in your company, or they provide a service to your company, and then you have a bunch of users, which are essentially your product. The product is the users. They sell their data to, Citadel, and that's how they make their money, because they're not charging you trading fees. Who do you expect them to favor? You expect them to favor their, the people that's making them the money, or the people that's their affiliate, not their product. No one cares about the actual product. You care about your buddy. So I would expect Robinhood to always screw over its quote-unquote customers in favor of, Citadel. So in this case, doesn't have me feeling any type of way one way or the other. But I think realistically, without any bias of Vlad or Robinhood's prior practices, I think there's a pretty good trade setup. 4-to-1 risk reward setup. If we take out the previous lows back here, either candle close or wick down below like 40 bucks, it's probably going to look bad, and it's probably going to break down to the 886. If we cross the 821 back to the upside, initially we're going to retest the 618, and then after that, we're probably going to retest the 0.5. So we could put like 2 little trade setups in play here. The first one being, and again, I didn't get crazy with like the stop loss here. You could probably tighten it up slightly. I don't really care, but roughly, that's a 2-to-1 risk reward to the upside if we tag the 618, and then it's a roughly 4-to-1 to the upside if we tag the 0.5. But overall, that I think at this point in time, even though this is technically bearish, as we just have our same low and lower highs, it looks like it's going to pick up some momentum. We have very clear bullish divergence between this point and this point. Not as clear, but again, pretty clear bullish divergence between these 2 points, as we basically have the same low here, but then we have a higher low on our indicator oscillators. So favor, in my opinion, would be that this area bottoms. But again, this is overall more of a bearish pattern, as we have a flat bottom with less highs, which means every time it gets bought up, it gets less of a move back to the upside, and then eventually it falls off the table, or rolls off the table. So, again, coin toss, 50-50 up and down. We have some bullish things, we have some bearish things. But if we're getting paid $2 to take the upside bet, if somebody says, hey, we're going to flip a coin, heads or tails, 50-50 probability of each. There's one head, there's one tail. It goes up or it goes down. $2 if you win, $1 you lose if you're wrong. Sure, I'll take that. Or, 4-1 here. Sure, I'll take that. That's, So we use risk, reward, and probability to success when we don't necessarily have an edge. But overall, looks like it wants to push up here. So here's MicroStrategy. This is a perfect example of why this is trash. MicroStrategy's whole argument is that they have Bitcoin on their balance sheet. Bitcoin's at all-time highs. MicroStrategy is not. It's trash. It's total shit. It is either undervalued now and should go parabolic to the upside because it should be at all-time highs if the whole argument is it has Bitcoin on its balance sheet, or it was extremely overvalued before. You could argue that it was probably extremely overvalued before because it had so much momentum in its favor. But the fact of the matter is, even now, it's down 42% from all-time highs. So if Bitcoin made it to, 65,000, that would be the equivalence of Bitcoin being at like 35,000 right now. So why is MicroStrategy such a piece of shit? Why is it such trash? Well, because Bitcoin is just Bitcoin. MicroStrategy is Bitcoin plus Michael Saylor plus a company that sucks. So you have two negatives in addition to the Bitcoin. So why not just buy Bitcoin? Unless you argue, well, MicroStrategy is undervalued, it's underappreciated. The whole market is wrong about MicroStrategy, so I'm going to take advantage of that situation. That's a legitimate argument and sometimes plays out. In my opinion, MicroStrategy is trash, and I would much rather just buy Bitcoin. But I would say the same thing about, a futures ETF. But in all reality, if we do break above, these two resistances right here, there's not much stopping it from just going back to all-time highs. So, but yeah, Michael Saylor is definitely, a bum. Bed Bath & Beyond, like the worst balance sheet ever. I was trying to make an argument for this pump back up to the top here. And to tell you the truth, when I looked at like the debt to asset ratio and all like the actual real numbers, because this is like an actual company, not a crypto coin, vaporware, it's terrible. I mean, does it get this squeeze back to the upside? Probably. I mean, it's putting in our divergence signal, buy, sell, buy, bunch of green histograms, finding support. But man, this thing sucks. It sucks. But again, what are you going to risk? 8% to make 48? There's still a possibility there. That thing was so freaking close to wicking us out. But hey, it is what it is. So they can't all be winners. GME, Game Stonkers, 821 have crossed to the upside, showing some weakness, 200 simple above the 200 exponential, but overall momentum in its favor. Probably going to just retest all these resistances. 206, what were those options? 200, I think he said. 223. I mean, it looks probable. Like at this point in time, probability is to the upside, I would say. But time is probably your enemy because I think he said Friday. Let's pull this out a little bit. And we'll pray. We're not just going to pull. We're going to pull and pray. Because the probability of success is higher. So yeah, we bottomed out right here at the 236/0.5. Quite a bit of confluence. We're holding the 618. We're crossing the 821 back to the upside. I think more than likely we come back up here to the 1.382. If we bust through that, I think we're headed back to 786 in orange, yellow, whatever. Yeah, orange. So, I mean, this thing could gain $100 quick. It could. Is it still a terrible company? Yeah, it's pretty bad. But technically, looks like it wants to pop up. Looks like it wants to pop up. AMC. Let's see how the apes are doing. 821 have crossed to the upside, well above the 200 exponential and simple. Momentum in its favor from the hard buy. Looks good. Crossed back above. Still has the blue slope. Overall looks good. Looks good. The chart looks good. The company, once again, still definitely trash. It's definitely a garbage company. It is a movie theater, and movie theaters are terrible. They suck. Everything is fighting against movie theaters. There's virtual reality. There's lazy people at home wearing sweatpants that don't want to leave their house. There's streaming services. They don't have Squid Games at the movie theater. So, You really want to go there without Squid Games? You can't Netflix and chill in the movie theater. I mean, you can. You can. I mean, it's not like I've never Netflix and chilled at the movie theater before, but it was like when I was a teenager, decades ago, not now. It would be awkward if, adults were Netflix and chilling in the movie theater. So maybe if they start selling booze and let you smoke pot in the movie theater, it'd probably get more popular. They have special movie theaters for Netflix and chilling, but I don't think you really want to go to those places. Your shoes like sticking to the floor and stuff. Could get a little weird, but yeah, probably not going to be a good investment. Probably not going to be a good investment. There might be a trade for AMC in the near future. You could argue that if we're going wicks, you've got like a little resistance right here. Breakout from that's going to give you a nice little move to the upside. You could argue that if we want to just go by like these closes, something like this. But at this point in time, you're basically at resistance, would be at the 0.5. So maybe you get a little push up from like 40 to 45, but that's a strong resistance. A breakout above 45, and you're going to retest 50 and then probably 60. But, if you get up to the 45 or whatever, it's probably just going to roll back over. Hopefully 382 holds, if not 236. And then eventually, if not, it's just a giant descending triangle. I mean, this is literally a textbook descending triangle. And eventually it's going to break. It's going to either break below 30 or it's going to break above 45. Overall, technically a bearish favoring pattern. But it is above the 200 exponential and simple. And it does have a cult following. So could go either way. But it's not looking great. I think time is AMC's enemy at this point in time. If the sooner it breaks out, the better, because the more it goes sideways to down here, the more likely it is to break down. And if it breaks down, you're never going to leave your mom's basement. You will literally live there forever. And I'm going to tell you this, when she gets older, you're going to have to start doing some weird stuff. She's going to be asking you to like pull out a file and shave the bunions off her toes. Okay? Weird stuff. All right. So if you're in AMC, get it while you can and get out of there, man. You do not want to be stuck living in your mom's basement forever. Or maybe you do. I don't know. Maybe you're into bunions. Newegg. Got that little pop up, man, but this thing's still looking weak. You could argue that a lot of these descending triangles, though, are testing our little resistance. Gold and silver and some of the other metals are doing a little something like this as well, where you have like a pretty clear, well, I shouldn't say pretty clear. You have a sort of clear resistance area that you're like punching up against, and now you're like breaking out of them. So where's that breakout going to take you to? Well, depending if you're treating this as like a little ascending, like wedge, and then the breakout is going to be like the meat of the wedge, or if you're going to go by Fibonacci levels or whatever, let's just go with the meat of the wedge back here. If you get a little meat pie, what's that going to come up to? Probably retest like $20, but we're at 15, so it's not a bad move to the upside. Could just as easily come down here to 1075, but we do have hard buy signal coming out of the bullish control zone, momentum in its favor. It has sold off pretty heavily since $80. Was it ever worth $80? No, definitely not. It didn't literally go from worth $10 to $80 for any actual reason because it's a good company. No, it's terrible. This company's terrible. I mean, but it is an actual company. I bought computer parts from them. But, if we go back to 2010, it's in a horrible, horrible downtrend. The high here, the lower high here, the lower high here, and then couldn't even take out that high with this giant wick. So it's definitely horrible. It's definitely horrible. But there's an argument to be made that it could at least have a short-term bullish move. And maybe it breaks out. If it takes out this high right here or this high right here, maybe Newegg is worth more than $25. But in the meantime, it's probably trash. And it looks weak on the monthly. And it doesn't have a cult. Maybe some of the XRP guys could get together and they can all get together and reinforce the Newegg cult. I just don't see it. If you're going to be in a cult coin, you want to be in the strongest cult. You know what I'm saying? You don't want to end up the chicken or the altar boy. You know what I mean? You want to be like one of the cult leaders, one of the main guys. You want to be in the powerful cult. You want to be in the one that goes after Frankenstein's monster and burns down the windmill. You want to be in that cult. DraftKings looks weak still. Below 200 exponential and simple. It is still technically putting in higher lows, but it's got to be real careful. I mean, this was our buy area for potential. You know, a little push down. You could argue that there's a move in there now, 17% with a 5% stop loss. It just looks weak. It looks weak. Hard buy, bunch of green histograms. Could go either way. I mean, again, though, you know, it's what, 3.5 to 1 risk reward ratio. So maybe give it a shot if it gets down there. Maybe not. I don't know. But chances are, if Kathy Wood buys something, it's probably going to underperform or do horribly. Not the best stonk picker, but what do I know? I love Kathy. One of my favorite things to do is bust Kathy's nuts, or her lady nuts, or whatever. Let me jump in the comments and then we'll keep ripping here. When I watched, it was seeing it as confirmation. Oh, that's an old one. FTM Binance. Okay, I will pull that one up for next time. Appreciate that, Bubblies. So 10-year treasury, obviously broke above that high as expected, continuing to the upside. You know, I expected to get smashed back down again. You know, it's just going to keep chopping. It's chopping. But as long as it's above the 200 exponential and simple, it's bullish. You know, we were in a long bearish downtrend for a while. We had a bullish push to the upside. We retested as support. It held as support. We put in a bottoming pattern, and now we're coming back up. We're retesting resistance, and then I expect continuation to the upside. What is this going to mean for bonds? Bonds are going to take a hit. What is this meaning for all our patterns and all our crazy drawings on here and stuff? It's playing out perfectly. We have an inverted head and shoulders. We're finishing out the right shoulder now. We have a large cup and a small handle. And then anyone that knows about a cup and handle, the most technical cup and handles trade like this. They put in a large rounding bottom, often with a double bottom pattern and bullish divergence. They come back up, form a neckline resistance, after which they enter into a descending channel. When they get the break of the channel, they get the measure move back to the upside, which often lines up with the neckline resistance. And then eventually when they get the break from the neckline resistance and the actual pattern plays out, you get the move from the bottom of the cup to the top of the neckline here. And in this case, our measure move will take us up to roughly 3%. So somewhere between, our target is obviously somewhere between 2.5 and 3.2% on the 10-year treasury yield, which is going to tell us bonds are probably getting wrecked and the Fed has probably FOMO'd in to stop the inflation that they caused, to stop the deflation that the markets and actual world was causing. So they have to pump the Fed funds rate. They have to stop buying bonds. They have to capitulate and admit that, you know, they have caused inflation and it's out of control. Whatever. The fact of the matter is, the most important thing is that this chart is very bullish inside of a very bearish downtrend. So this is a very bearish chart, but short term looks bullish. So this is going back to the 80s, 1981. We've been just getting crushed forever. So this was the time to be long bonds. Right now is not the time to be bullish on bonds. Right now is the worst time. This last year is the worst time to be bullish on bonds. Anybody that was bullish on bonds during this is an idiot. You're 40 years late to the party. The party was going on for 40 years. Everyone's old now. They're going to die soon. Okay? They got liver cancer and they're all going to die. And now you're showing up to the party like, yeah, man, this party's pretty good. And everybody's like dying? No. You're on the wrong side of the trade, guy. Get out of here. Bonds are trash. They're garbage. Could they still have some upside? Sure, maybe, but come on, man. Come on, man. I mean, honestly, though, this takes us just right back up to the top of the range. That's our target. Maybe we break out to the upside. Probably we just come all the way back down to zero. You know, maybe China hits us with that super nuke from outer space. I don't know what's going to happen. Let's be real here. But if I had a guess, I would say probably bonds are going to like 2.68%. But these markets are all literally our bitch. They literally, whatever we talk about on stream and in the group, the market's like, yes, sir. Yes, sir. We will do this for you. Yes, sir. Thank you for the orders. We will follow your orders and never question them. TLT. So yeah, just, you know, essentially 20-year duration bond, doing the exact opposite. If you're looking at a high risk bond, you know, like a company bond versus a treasury bond, it's probably just going to be a worse version of the same chart. but essentially the opposite of what we just looked at. Long bullish uptrend, break down from it, try to reclaim the trend, it fails, and now we're going to see continuation to the downside. So if we just switch out to our longer time frame, we'll see that we're basically just putting in a giant macro head and shoulders, and that when we come back down here to the neckline, roughly around $135, we would expect that to break and then see a measure move, probably either to 129 or the 200 exponential and simple, like 116, something like that. Whatever the event, whatever the news, whatever the reason, it's probably not going to be a good thing. But in all reality, this has just been a macro, massive bull market forever, and this was our bond blow off top, and bonds are never going to be up here again, ever. If bonds are ever up here again, something went horribly wrong, okay? And it's probably the end of the world, so probably not a good thing. On the monthly chart, bunch of green histograms in a row, bunch of red histograms in a row. We're losing the slope. It is now officially red. We're down here barely stopping from going into the bearish control zone. Looks like this is going to get rejected off of the right shoulder, move back down, continue the red downtrend, rejected, stochastic, blue gets beat down by the purple, and then we see the move to the downside. Very likely these are going to get crushed. But what does that tell you? It tells you probably the Fed or the market is going to raise rates soon, whether the Fed wants to or not. And then you're like, yeah, well, I could have told you that. The inflation everywhere. They got to do something. They got to stop buying. Well, whatever. I mean, this been doing everything we've said for the last multiple years. Everybody was like, there's inflation. No, there is no inflation. The Fed is causing inflation to stop the deflation. And now the inflation is here. As we said, the Fed's causing it. They're the cause, the reason for the inflation. Now everybody's like, there's inflation. The inflation's going to go on forever. And it's like, well, no, it's not. Now the opposite's going to happen. So everybody got scared of inflation because there was deflation being caused by the markets, and the Fed was causing the inflation, and now everybody's going to run out of dry powder, and then the inflation's going to go away, and then we're going to go back to deflation, and the market wins. Because the truth is, the market wants deflation. The world economy wants deflation, and the market always wins. But in the short term, the central banks, the government's monetary and fiscal policy have manipulated the markets by causing temporary inflation through supply chain bottlenecks and through, money printing and, handouts, world socialism, whatever you want to call it. But the truth is, eventually the market wins. Now, is that a capitulation event because, monetary policy or fiscal policy fails? Is it a capitulation event because there's a nuke? Is it a capitulation event because, the Federal Reserve finally just says, I was wrong? Does Jerome Powell just say, you know what? You want to FUD me for my insider trading? Fuck you then. I'm raising rates to 5% tomorrow. I don't know what the event's going to be. I don't know what's going to happen, but there's more and more things saying right now, y'all keep busting old Jay Powell's nuts, and he just says, oh, really? You're not going to nominate me for a second turn? Watch what I'm about to do to your markets, bitch. I mean, I don't know. Maybe not. Maybe he's just going to go out on his shield and say, there's still no inflation. I can't believe you didn't reelect me. There was no insider trading. I investigated myself. And according to the federal policy that we made for ourselves and the internal investigation that I did on myself, I did nothing wrong. And I can't believe you guys don't want me in here. And then, what? Then we get, I don't know who we're going to get after that. Maybe Bostic. I don't know. We'll have to wait and see. But probably we're going to get somebody even more dovey than Jerome Powell, and it's probably going to be a Democrat. So what is that going to lead to? Probably the end of the United States as we know it. Maybe socialism does win in the end. I don't know, or communism, whatever you want to call it. VIX doing exactly what we said, coming back down here to the bottom of the range. I expect the market to continue melting up. I expect this to continue melting down. And then when we get back down here to key support, maybe something happens. We are kind of at some support right here, some chop, whatever. But, this was our neutral area. This is our area where we're bearish on the markets. Wait, bullish on the markets? Wait, yeah. And then this is the area where we're bearish on the markets because it's inverse. The VIX, obviously, volatility. This thing, markets are typically just going to go up. When we start seeing volatility goes up, it means probably markets are going to be going down and vice versa. So U.S. oil continuing to melt up as expected. We're up at $84 now. Soon we'll be at 90. Then we'll be at 95. Then we'll be at 100. Then we'll be at 120. Then all-time highs. I'm not going to go into the whole oil argument, but Told you so, world. Told you so, Kathy. Dow Jones, all-time highs, retesting all-time highs. Expect continuation, momentum in our favor, bullish control zone. But let's remember that what we need to be careful of is bearish divergence developing on the weekly. We need to be very careful because we now have 1 point, 2 points, and we're about to have a third point, potentially. And then we have 1 point, 2 points, about to have potentially a third point as we're well under the slope line on the weekly. So, we have saved price action for now. We are reapproaching all-time highs. Maybe this thing goes parabolic and we hit our 50,000 target. Maybe not, but definitely cautious. Me personally right now, not interested in index funds. A lot of time I will be, but indexes at times like this are just not ideal. It's a stock picker's market. That's what I'm trying to say. And it has been, obviously, for a while. S&P, same thing, retesting all-time highs. Does it double top? Does it go to new all-time highs? New all-time highs. I'm just guessing, assuming, whatever. Rates could put pressure on the NASDAQ. So is the NASDAQ as bullish? No, as rates are rising, the NASDAQ is having this move to the upside, trying to hang on to the markets. But because everything in the NASDAQ, because tech is so overvalued, multiples are so high, we would expect as rates continue to rise, if rates continue to rise, we expect tech to underperform. So in my opinion, if rates keep trending up, if bonds keep trending down, if all these macro things stay into effect, NASDAQ is going to do poorly in comparison to, our lower multiple, more blue chip type actual companies. You know what I'm saying. So NASDAQ, not quite at the all-time highs, underperforming slightly, but still looks good. It just looks less good. And speaking of less good, let's look at the old Ruddy. Russell 2000, still trash. It's been trash for a year now. It is continuing to be trash. It is not disappointing. All of 2021, it has literally gone sideways. It's barely able to hang on to the heart line and 200 simple moving average. Where's it going next? Well, we had that little triangle in play. We said whichever direction the triangle plays, we want to see a breakout, a retest, and then we see continuation. So I expect the old Ruddy to come up to like 2350. So Russell 2000, 2350. At which point in time, what's it going to do? It's going to get all the way to the top of the channel and then go back to the bottom of the channel, or at least the heart line, because all it ever does is just go sideways. It's just a sideways trading piece of trash. Trashy trash, trash, trash. XLB made it all the way back to the top of the triangle, as expected, as predicted, as discussed. Giant descending triangle, technically bearish, but we are at the top of the range. So what we want to see here is a breakout, a retest, and then continuation to new all-time highs. Material sector, if this starts breaking out to new all-time highs, that's a good thing for the overall health of the economy and markets. Well, theoretically. We want it to break out from demand and price increases. We do not want it to just break out because the prices are going through the roof, but the demand is just going down, but less fast than the prices are going up, if that makes sense. If I'm charging $2 for a widget and I'm selling 100 widgets, and then all of a sudden I start charging $4 for a widget, but I'm only selling 75 widgets, we get the breakout to the upside, but it's not good. I want to see the opposite. I want to see the widget demand go up as the prices go up. And that's good for economies because it's like expansion. I do not want to see price increases just filling the gap where the demand is, because that's unsustainable over time. If there's demand for the same amount of widgets or still good demand for something, it means we probably are actually increasing GDP, we're increasing production, it's good, it's healthy, everything's fine. If we're just filling the gap with extra prices because we know a certain number of people are just always going to buy these materials, that is not good because it's not sustainable over time. Because eventually consumers or manufacturers or whatever will go out of business or be priced out of said market, and widgets will eventually crash or whatever we're talking about. XLC, communication, still has a little gap up here. Trying to do a little bottomy bottom. A bunch of green histograms. Looks decent. I think it's getting continuation. As long as it stays above 81, it should pop up here pretty quick to 83. Not really tradable, but looks decent. XLY, got the breakout of our ascending wedge. I expect it to come back down, retest, break, retest, continuation, bullish move to the upside. We can just take this same little potential extrapolatory target and just put it on the top there and see where do we expect our consumer discretionary up at about 200, 203, which again, not really a tradable range. It's like 5% move or whatever. But what does that say? Well, it says the consumer is strong, in the words of CNBC. XLE energy breaking out, very much underperforming over the last 20 years, but overperforming right now. But again, is this because there's excess demand, or is it because prices are going up because there's not enough supply to meet the demand? That's the one. The second one, what he said. So we got to be careful here that this is we're probably reaching some sort of temporary top on energy sometime in the near future, but we'll have to wait and see. And we're seeing different markets throughout the world have different effects, like oil, nat gas, etc. But this was all very clear. This was that inverted head and shoulders. We have the left shoulder, neckline, head, neckline, right shoulder, breakout, the extrapolation of the move, the head to the neckline. That's our measure move to the upside, at which point in time we're retesting all-time highs, at which point in time, if we zoom out here, oh, look at the one more market just being our bitch, doing exactly what we told it to do. That's our 1, that's our 2, this is our 3, here's our 4, retest of the top of the 1, not by more than a, wick on a longer time frame. Now continuation to the upside. So where do we expect our bitch to go? Well, we expect it to come up here to $64 next, and then after that, $74. So, and is that going to be the end of our wave 5? And then we go into an ABC correction, pull back to put in a higher low, and then this becomes the 1, and then our 2 is the correction, and then we see a 3, and that's energy potentially retesting some of these levels or potentially all-time highs before it goes absolutely parabolic? Well, yeah, probably. This whole, again, the macro view is we need clean energy. We got to change everything. We got to stop with this coal. We got to stop with this, that, and the other. We got to go green. We got to do, all this carbon credits and all. But the truth is, it's not there. We don't have it. All the companies that did this, all the woke countries are failing right now. France is closing down its nuclear power plants, which is sustainable, and trying to do other stuff. All the other countries are screwed right now. France is doing good because they have nuclear power. Then you have like Germany with the electricity. You have a bunch of these other little woke countries, with their wind turbines and all this stuff. And they're all in shit shape, because coal price is going up. Oil price is going up. We're running out of nat gas. England's price is going through the roof on nat gas. All these people that didn't reinvest in what already worked while they wait for the technology to catch up are screwed now. So what is that going to do to energy? Energy is going to go parabolic. And again, all the momentum in its favor, bullish control zone, reclaiming key levels. 200 exponential has flipped back over bullish, headed back up to 200 simple, consolidate for a little bit, burst to the upside. Woke agenda fails. And then, reevaluate in 20 or 30 years. But, it is what it is. It's great to say electric cars and sustainable energy and we love Mother Earth and we got to be good people. Sure. Let's get there first, and then we can pull back on the stuff that is currently working and sustaining life as we know it. Let's not pull out the stops on all the stuff that works, and then we're going to invent some new thing that when you get in a car crash, it fills your whole car with foam and stops you from dying. So in the meantime, we're going to get rid of all airbags and seatbelts. Well, that's what we're doing. That's what the world is doing. The green energy, the clean energy is one day it's going to be so much better than seatbelts and airbags. So we're getting rid of all the seatbelts and airbags now. But what if we get in a car crash before that happens? Well, we're going to find out. We're finding out real time. So XLI, industrial sector, retesting the highs. This is good for the world, good for, production, economy, whatever, technically. But got to be careful. We're not just going to end up like topping back out here again. Momentum in its favor, bullish control zone, looks strong, solid bounce off of the 200 exponential and simple as expected. I do expect this to come back up here and retest the top of the range at like 106. A breakout to the upside will give us our measured move and a target of roughly like 112 to 114. Do I think we break out? No, we probably just trade inside the range, like always. But we are at the heart line of this giant channel, and if we do break above the heart line, we're going to get into the top and our potential target one day, if possible, eventually, of like 120. And if we do make it to 120, I think that is going to be our macro top, as we have been trading inside of this ascending channel since 2009. So we've got 12 plus years trading inside this channel. Every time we've come to the top of the channel, 1 time, 2 times, 3 times. So more than likely the 4th time will be a top as well. Do we get there? I don't know. But if we do, got to be careful. There's definitely not enough meat on the bone, in my opinion, to be entering any of these. Or that one specifically, I should say. XLF financial, we would expect this to go parabolic as rates rise. If rates continue to rise, we would expect financials to rise. The majority of this sector, banks, financial institutions, etc., have been sustaining because the markets are pumping and going up. And, that's where they're generating a lot of their income, or wealth, or whatever you want to call it. And now on top of that, if we keep melting up, if we keep going parabolic, if we keep going to the upside on stonks, I would also expect, as rates rise, if we continue going up, banks and institutions would do well as well also, because they would then have even more tailwinds. So, and then say there's an alternative effect. Say rates go up and the markets go sideways or down, this will still have some pushes to the upside, but probably not do as well. But if rates rise and stonks continue to go up, financials should absolutely kill it, in my opinion. But, who knows? Maybe PayPal and Square upset the space. Maybe, rates crash when we get a dove in because Jay Powell gets kicked out. Maybe, I don't know. We have to wait and see, but it'll all be in the charts. XLK, Tech, retesting the highs. Tech's got to be careful here. Again, the charts look okay. They look good. They're retesting. But Tech looks prone to a double top potentially happening, especially if we see our rates are retesting the highs. If the rates break to the upside while Tech is at these highs, multiple expansion is not going to be possible, in my opinion, or very, very unlikely. Very unlikely. So one of them's probably going to double top. And in my opinion, it's going to be Tech over rates. XLP. Staples look good. Looks decent. But again, this is one where I'm worried about the left shoulder, head, neckline, right shoulder situation. Really want to see some continuation. We did cross 821 back to the upside. We have moved up barely at all on price action and moved all the way to the top of the range. So this could potentially be danger zone. Looks okay for now. Really need to see this clear like 71, 72. But again, it's not like this is not really like a tradable range. Overall though, chart looks good. We have a technical breakout. We have a retest. And then I would expect continuation. We're putting in the same low consistently and we're putting in higher highs. So more than likely we come back up to the top of the range. We break through our little channel right here. And then we get the measure move up to 74 or so. Again, not really tradable, but definitely worth considering, paying attention to, watching, understanding. XLU utilities looks very similar chart. We got the peak here. We have a potential neckline, a double top head, potential neckline, and now we're coming up here. We need to clear through this 67 range, at which point in time we retest the highs and then probably go higher. But we're basically just operating in the bottom half of this channel, trading fairly technically overall, hanging on to 200 exponential and simple. Momentum in our favor. Maybe run out of steam here. This thing really needs to punch higher quickly. We don't want to see it just slow grind up. If it slow grinds up, it's going to run out of steam and then it's going to roll back over, in my opinion. But I just draw colorful lines and stuff on charts and I don't know what I'm talking about. XLRE, real estate. Nice little move up there from the 821 cross inside the bullish control zone, picking up some momentum, bunch of green histograms. Looks okay. I think it comes back up here, retest the highs. Looks okay. Again, though, rates could potentially put some serious pressure on this. So something in the market is lying right now. Somebody's not telling the truth. We don't know who it is, but we suspect rates are telling the truth. We suspect that there's probably going to be, that probably tech and real estate are going to be wrong, in my opinion. But again, technically, look okay. But we're starting to break, at least short term, some of those important correlations. Man, look at that volume. Damn. XTN, transportation, that's wild. Look at that volume candle right there. So what was that volume candle? We saw a big volume candle here. That was the bottom before new all-time highs. We saw a big volume candle here. That was the lower high before a big sell-off. So since we're not at new all-time highs, it looks like that probably is going to be attempt top, but we do have like a little ascending triangle right here, which a bullish breakout here would probably just put it up at new all-time highs. So, which, I mean, to tell you the truth, I would expect transportation to be strong, like cyclically going into the year end, like the end of the year. Like we're coming up on Thanksgiving, we're coming up on, Christmas, all-time highs in transportation costs. So even if there's a little less demand, I think the prices make up for it. I would think this should break out to the upside for the next couple months. And then I think somewhere around like January, we put in like a macro top. But again, that's just my theory. Jets looks terrible. Planes, the argument for their planes is coming back. There's going to be extra travel demand, and it's going to make up for business travel lacking, or it's all bullshit. We're getting rejected by a 200 exponential and simple. Looks like we're rolling over. Jets looks like trash. Keep in mind, airlines topped out and probably will never, ever reach all-time highs again. This was the peak. We peaked in 2018, and airlines will never get to that level again until maybe something changes. But in the meantime, no. I thought I had a support line drawn in here. I probably just deleted this chart because it sucks. I thought I had something like this going on, but, I'm paying attention to, without getting too crazy, I'm paying attention to something like this. This is a key support. If this breaks, it's going to be dump city in this bitch. So, we've got a bunch of resistance above our head, 200 exponential and simple. We have a weak support below us that we're getting weaker and weaker bounces off of. So what do I expect to happen? Looks like this thing's about to shit the bed. So without getting like too technical with it, it's going to zero. Where's zero at? Straight to zero. That's the exaggerated move to zero, okay? So we'll just to be like a realist, let's put it in at, let's just stick it in a random place. That looks good. We'll go to there. That's where it's going. 100%. Exactly. To a T. Yeah, probably something like this. Probably like the 0.5. That looks good. I like it. I'm sticking with that. And then after the 0.5, $18, next target is zero. So, yep. EMP blasts all planes out of the sky. Jets goes to zero by end of day. News at 11. Hail. How are we doing on time, guys? 2:42? Okay, nice. Hail. Still very, very technically. Trading inside of our little triangle channel, whatever. Still kind of finding support at the 200 exponential, kind of finding resistance at 200 simple. A break in one direction or the other can change this. It's probably going to top in or around this area. Maybe it gets a wick up rejection and then rolls back over to a new low. Maybe it breaks out to the upside. Maybe it just rolls over here. I don't know, but doesn't look good. Does not look good. Oh, wait. Yeah, this is hail. Okay. UPS, getting that nice move back to the upside. I do still expect the gap fill at like 207. I do expect this to be strong into end of year. I do. 15% move to the upside to fill the gap. Remember, we called for the gap fill to the downside. We got the gap fill to the downside. Trade setup in place. Call for the gap fill to the upside. We are very, very close to getting that gap fill. Gonna have to chop through a little resistance right here at these two little peaks, but I think we're very close to getting that. That looks very, very probable. So, I just went backwards. FTX, FedEx. Yeah, I mean, it looks like it's bottoming here, picking up momentum above the slope line. It has flipped over a blue, bunch of green histograms, left the bullish control zone, hard buy signal. Once again, another gap fill about to happen. 250, 10% move to the upside, roughly. Again, 12% trade setup, 4% stop loss, doing exactly what I said, double bottoming off of divergence and our signals, at which point in time we fill the gap, we get rejected by the 200 exponential moving average, and we roll over, or we consolidate and we go back to the upside. Again, bullish on this till like end of year. Come January, though, probably not going to look good. I think that there will be increasing demand in the fourth quarter, historically, obviously, and then also increasing prices. So historically, that's good. Both those things are good for the stock's value. But after that, I think we probably see peak and multiple contraction after that, and we come down to our 180 target. So once again, another one of our bitches doing what we say, or we smack them up. So let's rip into, let's do our precious metals, miners, all that junk. CW says, a buddy of mine has a funny story about finding lady nuts where none should have been found. But let's not point fingers. Where was he at? Thailand? Bangkok? That's why they call it Bangkok. Oh, I love that movie. Hangover. So funny. I think it was like the third one. Very funny. Gold, still just doing the same thing again. This rejection off 200 exponential and simple. Everybody's super bullish here, and then bearish, and then bullish, and then look, nothing's happening. Maybe this thing is carving out a bottom. Maybe it's doing. Oh, that was like some random other video. I probably just need to delete that. Yeah, I'm actually going to do that right now because I want to draw something on here. That was where we were talking about like steady investing over time. We got to look at, something of a resistance. How we want to draw it in here, could go either way. It's not a very clear, like perfect way to draw it. You could argue that it's this high right here. You could argue it's from here and skips this high, whatever. It's a little more technical on some of the other charts though. But at this point in time, I'm basically looking at this as a flag that eventually should break to the upside. Theoretically, will that happen? I mean, who knows? Probably not. Probably gold will just not do anything while everything else on earth goes up. But, fundamentally, does that make sense? Well, not really, but we're in the world of rampant speculation. I would much rather own an NFT that's worth nothing that I can sell to somebody else for more than actual gold. I mean, duh. Why wouldn't you want NFTs of monkeys with bananas that are worth millions? Because or you could have gold. What are you going to do with that? Use it as a doorstop? Idiot. Silver. Okay, so silver is a perfect example of, what I'm seeing as at least a short-term technical breakout. A lot of the metals are doing this. Again, we kind of had like this little poke out failure right here. And then we came up, put in our little double bottom head and shoulders. And then we got our technical breakout. Where is that going to go to? Well, retesting 200 exponential and simple. Maybe as high as like 25 or so. Gaining some momentum, picking up some steam right here. Let's look at our gold, silver. So 25.50, probably our target, at least for now. Realistically, though, do we just put in a left shoulder, a neckline, head, neckline, right shoulder, and then get a break back to 28, 29? Maybe. We don't know yet, but there's a path to victory for silver in the future. What is this telling us? Well, this is our gold-silver ratio on the weekly, doing exactly what we said. Came all the way back up, picked up momentum, came back to the 200 exponential and simple, ran into resistance. Now it's selling off. What is this telling us? Gold is losing value in comparison to silver. Is this going to be our macro continuation? And we just, peaked early right here and that was it? Or are we going to see like a little recharge and then continuation? We almost hit the measured move. So we were almost there. We made it to the 382 from the bottom. So, any higher low right here and then continuation looks likely. I think probably we're putting in a 1, 2, 3, 4, and then we'll see our 5. And that will be the 5 waves of the B before a continuation to the C when silver macro gains. But hard sell signal, bunch of red histograms, still above the slope line. But we are below the 8 and 21 now. And it looks like if we continue here or stay here for long enough, it'll cross back to the downside. And we'll see that continuation. And it's going to look an awful lot like this right here, which is what we expect to happen. I do expect silver to gain exponentially to gold. But again, this might happen over the next 5 to 20 years. It's not going to happen tomorrow. So I think probably we're going to get a situation like this where we have a nice pullback and then all of a sudden a burst to the upside. Nice pullback, burst to the upside, and then gold never or no time soon ever reaches like 90 golds to 1 silver again, or 90 silvers to 1 gold again, or at least 90 times soon. So hodl your stones. Silver squeeze 2022 because 2021 didn't work. Maybe 2025. XBT, we see that same thing: resistance, breakout, bottoming pattern, divergence. We hit the first target to the upside, and we're on our way to the second, back above 200 exponential, on our way to the 200 simple. Almost there. Once again, another one of our bitches. AG, First Majestic, some of these miners look like they're bottoming, coming back up to retest these, just doing exactly what like the platinum and silver chart are doing. I mean, these things are pretty beat down. So there's definitely some potential here. Definitely some potential here. So is First Majestic coming up to $13.50 or $15? Yeah, probably. Probably. Silver Junior is just like First Majestic with like some other shitcoins attached to it. And by shitcoins, I mean silver shitcoins. Still the same chart. USAS, so far trade setup is playing out nicely. You know, bouncing that key support at the yellow down here. Nice little risk reward ratio. You know, at least back to resistance in the 200 exponential and simple. It was like 5-1. Maybe we get up to the top for like 250%. Again, just extremely, extremely beat down. And we spoke a little bit about the fundamentals, balance sheet, etc. About that one. Hint, hint. We privately spoke about it in either the group or a video in the group that you only get access to in the group. I wonder what that means. Tilray got a nice little push up. Finally hit that under $10 mark. And it just missed the 10 under 10 video by like a day. Literally, if it would have just went down by like 20 more cents, it could have been in the video. But no, had to be a little fucker. You know, there's a good possibility. I still think from way back here, there's a good possibility this is bottoming. We had our 1, our 2, our 3, our 4, and then potential 5. And the 5, I think, takes us up to like, it's like between $300 and $1,000. So, I mean, it's at $12 now. If it goes to $1,000, that's probably a pretty good trade. There's some upside potential here. Is this bottoming? I don't know. I mean, the pot stocks look pretty bad. So probably it's just a reflex rally before further downside. But there was plenty of stuff telling us that we're getting a potential move back up to like, I think like 15 to 17. But I think a lot of people are probably underwater in positions from, you know, like $14 to $16. So there's going to be a lot of overhead resistance at those levels too. So when we do pop up, I think it's probably going to get sold into and we're going to probably put in lower lows. But who knows? I mean, these pot stocks are just beat down. Beat down. ACB, same thing, had a nice little move up here. I mean, these pot stocks all look pretty much the same. CGC had a nice little move up here. As long as they crossed the 821s back to the upside, I think they all retested 200 exponential and simple. Like $20 to $25 for this one. Uranium space, breaking out to new highs, looking good, looking bullish. Got to be careful of potential divergence, but as long as we just see continuation on the indicator oscillators, we're doing fine. URA looks good. UEC got that big boy burst to the upside. $4. I mean, I'm up ridiculous on this thing. Gotta love the UEC. Gotta love the whole uranium space. But clean energy, nuclear power, the meltdown, because the fish have the 3 eyes and the, oh man. CCJ, same thing, looks good. Burst into the upside. URNM, a little weaker. Kind of still double topping right here. I think it just chops through resistance and bursts up here. Copper looks good. Is this going to be a double cop? Is it going to be all-time highs? Is this just a squeeze? I don't know. There's a lot of gap action on CPER just in general. But this is just exposure to like the underlying. This is just based on, I'm pretty sure, I think this one is just an index based on the futures contracts. Yeah, I'm pretty sure. Looks good. I mean, a bunch of strength, bunch of momentum, strong argument for copper. Commodities look good in general, with the exception of gold and silver and platinum. They all look terrible. But eventually, maybe they'll be good. LIT, lithium, this thing's going nuts. Yeah, probably just going to keep cruising up here. I think my target was like 90 way back when. I did not think we were going to get there. Yeah, 90, 77. I mean, technically we hit the box. We did it. We're in the box now. Tell your friends, I got that box, bro. Did you really? How was it? It was nice, man. Warm and wet, the way I like it. Hydrogen, HYDR. Again, I just expect this thing to top out here again and come back down, potentially put in new lows again. This thing is literally just chopping around. Yeah, nice little move though. But again, this thing is just such a tight range. There's just not that you're 20 on the low, 24 on the high. Not a lot of meat on that bone, if you know what I'm saying. Damn it, lumber. So yeah, lumber looking like it's potentially topping right here. Is it going to do the head and shoulders thing? Did it hit our target? Did we make it? Oh, lumber, you bum. What was the high? 824. You little front running son of a bitch. I had you at 832. You $8 SLB. You 1% offer. 76% to the upside. 76% move. You couldn't just go the full 76. You got to stop at 75. Whatever. All right, I was wrong about lumber. It only went up 75%. It didn't go the full 76. So I admit it. I admit defeat. I mean, it might still get there, but I was wrong. It's wrong in the lumber. Kathy was right. Oh no, that's the oil. That's the oil. Kathy doesn't talk about the wood. I wish she would. This stream's going too long. Losing my goddamn mind. Caterpillar retesting 200 exponential and simple. Looks okay. I mean, it looks weak, honestly, but there's a lot of chop right here. It could easily get up to 215. It could easily get rejected. We'll have to see. Deer a little stronger. Same thing. 351. I expect to be range bound between 334 and 351. Definitely have like a little bit of bullish divergence, so that's good. But is it playing out now? Is it going to continue to play out? Probably already played out. Majority of it at least. AM, Antero Midstream Corporation, that H2O, that hydro. You got that hydro, bro. Playing out nicely so far. I'm obviously in this from a much lower price, as you already know, but the trade setup is playing out nicely as well. Maybe even get to that $17 mark. I don't know. Strong. Above the 200 exponential and simple, all-time highs. Strongity, strong. CX, CEMEX, does not look particularly great. No divergence. Bouncing back to the heart line. This looks like it's going to get rejected. Well, if it consolidates here long enough, it's going to have trouble getting through like 740. But if it does, 780, it's not really a tradable range right now. We're basically in the middle of the range, and it could go either way. CLF, Cleveland Cliffs, got that gap fill we spoke about. Came back up here. We'll have to see. Does it roll over? Does it creep back up to the upside? Commodities in general are doing pretty good right now. So I would expect these like steel and iron companies to do well. I don't know though. I mean, again, are we just going to top out around like December with all these industrials, and then, we're going to have like transportation, industrials, materials, all topping out around the same time, and then go into a macro deflationary environment? Maybe. When these supply chain bottlenecks come out, when is that going to happen? Probably like early next year. Is it going to happen before the holidays? Probably not. It's probably going to take a few months. Probably going to be, end of the first quarter next year. And then all of a sudden, all this extra supply, all these bottlenecks are out, all these goods are around. And then we're coming into like a slowing economy, rising rates, like, deflationary forces, extra supply comes online, demand starts to fall off a cliff. There's a strong argument that that all the shit's going to hit the fan like end of first quarter, maybe end of the half next year. We'll see. I think 2022 is going to be a rough year for like humans in general. Hopefully I'm wrong and everything's just great and it's prosperous and glorious and all is good in the Citadel in our giant golden Peter Schiff spaceship. Ford looks strong, retesting the highs. Looks like it just wants to rip. Could double top. I don't know. The most important thing, as long as we're putting in higher lows and higher highs consistently, Ford looks good. There's some strong arguments for Ford. I wouldn't be a buyer at these levels, but again, I'm already in position and up substantially. I would not be buying, me personally, have no interest to be buying car companies now. No Ford, no GM, no Tesla, none of them. No thank you. GM much weaker, but still looks decent. back above 200 exponential and simple. Definitely showing some weakness. Hasbro got that nice little pop up, but was that just a reflex rally? Very unfortunate what happened there. Rejection off the 200 exponential and simple. If this area holds, we cross back up. I think we get up to like 95, but honestly, I think Hasbro's coming down to the 80s. Some momentum, a little bit of strength here on the daily. Again, as long as 89 holds, as long as 90 holds, I think we can continue to chop between 90 and 100. But if it breaks, I think 82. Works breaking down below 200 exponential and simple. Doesn't look good. Doesn't look good. I think this thing's probably going to come back down. Needs to start holding like these key support levels. That's why I was not in a hurry to buy right into this. A lot of time these like shitcoin squeezes too, or shit stock squeezes or whatever. You get your money, get out. Everybody gets their money. It gets wrecked. They didn't get out. It goes up again and they're like, yes, it's going again. And then they don't get out again. And then eventually they get out. And this thing just keeps going down. Maybe. Any looks good. As you guys know, it's at top of the range, at top of the channel. Looks like it's topping out here. I don't know why I said looks good. I thought I saw something that was talking about them mining Bitcoin. If anybody knows anything about that. I read an article. I don't know if that was correct, but it was talking about they're getting into mining Bitcoin. I don't know. Maybe that's why they got this recent pump. Again, I just go at technicals, Looks like a giant inverted head and shoulders, topping out at the neckline, topping out at the top of the channel. Looks like it wants to come back down here. I'll be a buyer again at this thing at like 270. I'm not writing this down 66% to rebuy it at $2. But remember, though, that if this thing even ever starts moving back to the upside, a move back to the 0.5 is $26. So if we get it at 260 and it goes to 26, that's a 10x. If you bought it here and it goes to 260 and you don't sell and then it goes to, or maybe it doesn't go to 260, it goes to 27 right now, it's still like a 3x. But just remember, this thing was $2,200, $2,221. So this is a shit company. But there's potential for it to go up, not for the actual company. I don't know anything about the company. And if they're mining corn, maybe that's good. I heard there's going to be a corn shortage. Or no, Bitcoin, that's different. Different kind of corn, man. Come on, man. Walmart, nice pop to the upside. That gappity gap up. That Walmart squeeze. Trying to save the economy. I heard Walmart's going to have a dress code now. People will shop there again because it's safe. Nah, I'm just kidding. Oh, it's going to zero. If you've never visited People of Walmart, it's like the best site ever. If you're not in the United States and you don't know what that is, Walmart's basically where like all the, we'll just say, middle and below class people shop for groceries and clothing and stuff. And they have a website, and all it is just things that you should never see in public, funny or weird or disgusting, that people take at Walmart and then post on this. And it is hilarious, but also a little disturbing, but hilarious. Western Asset Mortgage Capital Corporation, trying to grind this out for that retest, but looks terrible. Couldn't even maintain the 821. It looks like it's rejecting and rolling over. Again, I am not in this. I'm not interested in this. Could this trade setup still play out? Yes, but after this technical breakdown here, it probably goes straight to zero. It's going to zero. MGM, looking a little toppy right here. That was a powerful candle, consolidation. I think it comes back down, retest like $44, but I would imagine it holds. I don't know. I don't know, man. It had a nice move. I believe it hit some of our initial targets. Did I have a trade set up and play for this? No, I don't think I did. Yeah, as long as it holds above like 42, 43, it looks good. But, 10% down before it gets there. We'll see. Armor Residential, ARR, that REIT. Same thing. Got to be careful with this. Yeah, this thing looks like it's about to just get wrecked. Yeah, looks terrible. Looks horrible. All right, let's finish up with our tech and then get out of here because we're coming up on time. What are we at right now? Oh, we're at 3 already. Let's rip through these tech stocks. DXY, just like we discussed, letting off a little bit. given everything, a relief rally. Do still expect our target. We're almost there. 821 cross. We come back down. We retest the breakout of the neckline. 93.17. We're at 93.50. So we're almost there. You know, this is just, to me, bullish reset. Cooling back off for a minute for a continuation to the upside. Looks good. Do we get down as low as 92.50? I'll be less confident then, but still looks good. As long as we're above that white line, looks very strong to me for a continuation. And then we also have the inverted descending head and shoulders we have already broken out of. It looks good. I mean, this was expected. Nothing to see here. Very bullish. Long term. Not going to go to longer charts. I'm just going to rip through these. Tesla looks good potentially. Got to be careful with that fourth quarter coming up here. Oh man, I didn't actually look. What did they report earnings today? I didn't see them. I'm sure Dr. Elon did his magic on the books and everything looks good. Do have to be careful though. Elon has some serious options expiring fourth quarter this year, and the tax bill comes due, and it's going to be roughly like something like $10 billion. So I'm assuming he doesn't just have $10 million cash, 10 billion with a B to pay his taxes with on those options, and he has to exercise them. So he's gonna have to get 10 billion from somewhere. So maybe he borrows 10 billion from the bank to pay the taxes, or maybe he sells some Tesla stock. It could go either way. He's probably gonna come out first and say Tesla is extremely overvalued, and then dump $10 billion worth. I don't know. That's rampant speculation, but careful here. Uber, yeah, again, I think this was just our retrace move, and then it rolls over. I expect this to go down. It's losing the 200 exponential. Did not even touch the 200 simple. Lower. Pinterest, this is exactly what we're talking about. Been waiting for the Pinterest play to happen. Been waiting for the Pinterest gap fill to happen. And then look. Oh, look. Pinterest bursts to the upside, hits our fib, almost fills our gap. It probably consolidates back down at like 60, comes up and fills the gap. And then PayPal says, well, we tried to work out a deal with Pinterest, but we couldn't get anything on the books. So looks like we're not going to buy Pinterest at $70 per share. And then it just rolls back over and goes down. And it's like, wait a minute. Did somebody just manipulate the markets to get out of a Pinterest position that they took a massive hit on when it gapped down from $72? Is there funny business? No. They would never do that. They would never lie and say PayPal was going to buy Pinterest for $70 to push the price back up to a gap fill that we were already expecting to get filled so that they could get out of their position. No, that's morally wrong. Wish looking good, looking strong. 821 potentially about to cross to the upside. At resistance at our first target to the upside. Next target to the upside is our 2.236 and the previous top right here at $8. After that, we expect our 82% move to come out, take out half of our position and let it ride. Wish. I wish it would just go up the other 60-something%. Wish. Airbnb. Doing nothing, consolidating, nothing. Everything else doing something. Sorry, Airbnb, no one cares about you right now. Do something. Bumble, choppity chopping. It still looks like a breakdown from that, and then it's retesting as resistance. This thing looks like it could roll over. There's still possibility it pushes up, and we get to that like 57 again. But I don't like this chart. I don't love this chart. I don't like these rejections here, but it's okay now. It looks like it's about to get to 821 cross. It's picking up a little momentum, hard buy. It could definitely get that move back over to 57, but I mean, it's a coin toss right now. It is definitely a coin toss right now. Good luck, my friend. And you know who I'm talking about. Baidu, reclaiming the 200 exponential. Next move to the upside, 204. Seems probable. Another like 10% or so. Could get tired here and roll back over though. Not loving the China stocks right now, but, you know, well expected relief rally. Nice so far. Baba, 821 crossing back to the upside. Powerful move. Not quite as powerful, but 202 looks likely. Again, another like 10+% to the upside. Obviously, some very clear bullish divergence. Nice, powerful push. But I do expect continuation to the downside, as I don't think China's out of the woods yet. I think it was definitely oversold, but TME, 10 cent. I mean, it probably gets back up here to like 934. Another like 10% sale. Again, same thing. Bunch of bullish divergence. Diddy at my foot, and I want to touch it. 821 crosses to the upside. Looks like it's probably coming up to like 970 something. Same thing. All these China stocks look the same, except for BZ. BZ is like doing the opposite. When everything else sells off, it just does whatever. And then when everything else goes up, it just does whatever. So it's probably just going to continue oscillating around this blue line here. Sometimes it'll be above the blue line, and that's when you should sell it. And sometimes it'll be below the blue line, and that's when you should buy it. But it's probably just going to hang out at the thin blue line. Remember, there's not financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. JD.com, back above 200 exponential and simple. Took out that previous high. Looks like it's going to keep creeping up here. This one looks much better. Headed to 91 next. Looks good. Looks gooder. Looks more good. It looks better. Neo, been overperforming forever, and now it's like slightly underperforming. As long as it's above 35, it looks good. Trying to reclaim 200 exponential, bump its head on 200 simple at like 44. Probably just chops around here for a little bit. EDU looking good. Trade setup playing out nicely. Running into a little resistance here. Next target to the upside, $3. And then after that, $5.84. Let's go. EDU in the house. What? Momentum in its favor. Got to be careful here. This is a little resistance. I think it's going to top out about $3 and then chop around for a while. But definitely looking like a little double bottom, a little bullish divergence, a little dollars in the bank. Peloton looks weak. This was this little move up here. Look at how much the indicator oscillators move. I mean, it probably comes up here. If everything else going to pump, I think Peloton gets a little pump too, but fails around like $1.05. Still trash. TSM, Taiwan Semiconductors, the majority of the move is played out at this point in time. 8% to the upside for the retested 200 simple. I think it gets there, but who knows though? This stock could literally just get nuked overnight. Not because Taiwan gets blown up, but like, well, maybe. It's a dangerous play right now. Danger, Will Robinson. INTC, Intel, the worst in the space. Still terrible. Below 200 exponential and simple. Trying to reclaim it. Probably just trade sideways and then goes to $40 eventually. Nvidia back at all-time highs, looking strong. I mean, if you don't own Nvidia, I don't know what you own. It's literally the best. AMD looks strong. Don't look at the balance sheet and the fundamentals and financials of AMD if you're interested in it or own it currently, because wow, it's scary. Looks good though, technically, like strong, but I'd rather have Nvidia. SMH semiconductor ETF looks good, slightly underperforming. You want the fastest horse in the race, or you want diversity. That's the difference. Do you want Nvidia or AMD, or do you want a basket? But semiconductor space obviously strong, and that's good for the markets, good for everything. But are we at peak supply and demand is going to keep creeping? Can we make up that demand? No, not anytime soon. It's going to take years for all this stuff. People are like, I don't understand why they don't just make more semiconductors. No, it takes years. We got to make a foundry. Then we got to process some silicone. Then we got to create the chips. Then we got to alter those chips or, ship them around the world. And then 2-3 years later, we have more semiconductors. Great. Maybe we should start 3 years ago. I agree. ARKK, man, poor Kathy. Something finally moved up. Tesla's like back retesting all-time highs. It's like the biggest position in her portfolios, and she's still. Oh, Queen Kathy, why are you doing so bad all the time? Still down 25%. Tesla at all-time highs. Kathy Wood is like the MicroStrategy of Bitcoin. Kathy Wood and the ARK funds. This is MicroStrategy to Bitcoin as Kathy Wood's ARK funds are to Tesla. So do you want to own Tesla, or do you want to own Bitcoin, or do you want to own MicroStrategy? Do you want to own ARK funds? Oh, Kathy, Why are you always trying to perform in the markets? Why don't you just do better? Because it's the court, and we love you, Kathy. You're an attractive older woman. Just get your shit together. ARKF, slightly better, still trashy. There's a lot of resistance here at like 55. If it clears 55, it probably just bursts to the upside and goes to a million, but probably not. Skills still looks pretty bad. Trying to carve out a bottom. Hard buy here. If it crossed 821 back to the upside, this thing could have a move. $15. That's like 50%. It's not bad. Nothing to write home about. Teledoc. Man, looks okay. A lot of overhead resistance. It's going to try to punch up here to like $158, but 158, 10% move. There's just no reason to get in. There's a million other things that look a million times better than this. Palantir, between 200 exponential and simple, hard buy, bunch of green histograms. It's hanging on. It's trying to do something. Looks okay. This is just like the neutral zone. If it pushes up here, 28. If it breaks down here, 21. In the meantime, it's right smack dab in the middle of the range. Unity Biotech Holding, UBX. It's on a fast track. It's gaining momentum. It's going straight to zero as fast as possible. And it's almost there. It's almost there. On the race to zero, UBX, Unity Biotech Holding, it's winning. It is winning. Could it bounce here? Yeah, but then it probably just goes closer to zero. And then eventually, it gets there. Unity Software, good, all-time highs. Oh, no, it's not. I'm sorry. Oh, that's that gap fill. It finally filled the gap. It filled the gap. We did it. Yay, we filled the gap. It took us forever, but we got the gap fill. Trade setup finished, 20%. Yay, Unity Biotech Holding. Unity Software, the good one. The good Unity, hooray. Does this roll over now, though? And that was the top. Oh, man. This is a very common topping pattern. The ascending triangle, the break, the loss of support, the retest of support, the support on 200 exponential, the new all-time or cycle high, the gap fill and trade setup complete at the 786. This could be danger zone. Got to be careful. This thing could roll over real quick here. I don't want to get presumptuous, but that's the wrong one. Went the wrong way. But I wouldn't be surprised to see it do something like that. Would not be surprised to see a little arc to the downside. But we'll see. I don't know. Maybe. Maybe not. Probably just goes to a billion or a zillion or a cajillion. Zillow. Zillow. Oh no. Oh, I thought I had a drawing tool on this. Did we not have a retest of the lows? Okay, so yeah, there was some FUD. Apparently Zillow been buying houses and not making money on them. As a matter of fact, it's consistently losing money on them and not going to do it anymore. So it gapped down. Maybe it comes back up, fills the gap. I don't know. How does this chart look to everybody? Below 200 exponential, below simple, barely hanging on to the 382. Zillow probably going to $65. So see you at 65, Zillow. See you later. Sorry, Zillow. Zillow is my only stock. I'm all in on XRP. Corsair looks terrible. Looks very bad. Very bad. Took out that low, so probably just going lower. You could argue that it hit our box, but look, if I hit your box, you're going to know it. And that's a fact, y'all. I've got references. I think 23.30 is probably, it's trading very technically, but there's just nothing here. Hard buy and then gap down after that. Probably just going to close the gap and keep going lower. It's not good. But we wouldn't be watching the stream if it wasn't for Corsair, because there's parts. Because they make stuff, and they're a real company. Zoom. Is Zoom going to be the next to fill the gap? Is it going to gap up to 338? Maybe 20%. It looks weak right now. It's trying to get that 821 cross. Bunch of histograms above the slope line. But that's a lot of nothing. That's a big move on the Stokes to go nowhere. It's bumping its head on that green resistance. I think it does it. I think it gets there. If you're going to coin toss it for the gap fill before it goes lower, I mean, oh, it's like 2 to 1 barely. You'd have to run a tight stop. I think that's probably the play. Nah, does it get there? Yeah, I think it does. Am I taking it? No, no, no thank you. Million other trade setups that look way better. SQ, that's square. Looks okay. Nice little push up. Crossed 821 back. Got the bounce perfectly off 200 exponential and simple. Hit our box perfectly. I think it's headed back up here to like 280. Gaining momentum. Looks good. PayPal. You know, this is funny. So PayPal says we're going to buy Pinterest. Pinterest caps up massively. PayPal capitulates. So I don't know why they had an inverse move there, but Pinterest definitely reaped the rewards of that one, and PayPal definitely got the short end of the stick, so to speak. Below 200 exponential and simple, this area probably holds and it probably moves back up, but I mean, at this point in time, you know, this thing's looking worse by the day. Somebody does not like PayPal. They probably got pissed. They're like, man, why'd you tell everybody about the Pinterest play? Should have warned me, man. I would have insider traded that since that's okay now. Everybody else is doing it. Jerome did it. I think it's just going to chop around in this range. It probably, I mean, that's not even like a notable move. It's only a couple percent, but it should look okay from here. Should pick up some kind of strength. I don't know. We'll see what happens with Pinterest. eBay, strong, retesting the highs. Still, again, eBay and Nvidia, like two of the best charts right now. As crazy as that sounds. Snap. Yeah, just chopping around here. I still think it comes down to 63. Man, this thing's just doing nothing. This little thing probably just, that little squeeze right there, I know that wrecked some people. Apple got some new MacBooks coming out, got some new earbuds coming out. 821 crossing to the upside. Hard buy, bunch of green histograms above the zero on the slope. It looks like it's going higher. Looks like it's going new all-time highs. Amazon. Man, I mean, is that just another gap fill? These markets just love to fill the gaps, if you know what I'm saying. I don't know. If we see another lower high right here, it probably comes down, and then it looks like it's just going to chop sideways. It probably is going to invalidate that head and shoulders and just chop sideways. But it looks very range bound, and will probably continue to be range bound. But momentum in its favor looks good. I mean, it looks good for something that's been trading sideways for a year, and will probably continue to trade sideways for a year in literally the best conditions ever. Facebook. Oh, we're almost done, guys. Thank you, Jesus. Facebook, you know, reflex rally off the dump, off the FUD, off the oversold, off the hard buy, off the bearish control zone, off the green histograms. What happens now? Well, it's probably still a shitty company that doesn't care about you and censors the stuff you say if it doesn't fit its agenda. But does it go higher? Nah, maybe. But I don't care because I would never own Facebook because Facebook is where I draw the line. I don't have a lot of limitations in my life, but I draw the line at Facebook. Things I will not invest in. Facebook and MicroStrategy. And number 3, nope, that's it. Those are the only 2. Google, I'm sure there's something else out there. Google looks pretty good. I do love Google. YouTube is obviously an amazing platform. Google, if you're listening, you're handsome, strong, powerful platform, and I love you. Honestly, Google, you're just doing a great job. Keep it up. Keep up the censorship. People like it because you're doing what's best for them. And YouTube, we're buddies, and I literally wouldn't be here without you. So thanks, YouTube. And your stock also looks excellent. So keep on doing what you're doing, YouTube. I mean, yeah, Google/YouTube. You're doing it. Keep it up. Last but not least, Netflix. Can the squid hold up the price? Is this all Squid Games? Is this a squiddy squid? I don't know. I haven't actually seen it yet. I'm just now finding out what it is. Obviously, do not watch TV, have social media, or nor would I probably watch Squid Games anyway, but apparently it's popular. So I'm assuming that was their breakout. High, much lower high, much higher high. Maybe puts in another high, third drive, bearish divergence, and then just capitulates. I mean, Netflix really looks like it wants to go to like $550. It really looks like it wants to go to $550. Maybe 568. Can it just hold this level? Yeah, it probably can. I mean, I don't know. I mean, do enough people like calamari on Netflix that the squid can hold up the price? I don't know, guys. Looks like it wants to let go. Are we gonna get the measure move though? I mean, we're the better part of the way there. Could we just push up a little higher? Could we get a Squid Games 2? Could we get a sequel? Could we get a behind the scenes? Could we get an OnlyFans for the Squid Games? 680? It's only 10 more percent. Could we get there? Maybe. But that's it for today, guys. Hopefully you enjoyed the stream. That is our Wednesday evening midweek market update. I am Crypto Trend Trader. It is 11:30 Wednesday, 10/20/2021 Eastern Standard Time. Appreciate everybody tuning in today. Appreciate everybody in the group. Hopefully you all enjoyed the 10 for 10. If you're interested in the group, blah, 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 hit me up. The stream, the stuff, the movements, the volatility, the all-time highs, the Bitcoin, the FOMO, the stuff and the things. All of that plus a cherry on top, guys. So keep it up. Protect your principal. Protect your capital. Love your friends. Love yourself. Protect it all. This is extreme volatility right now. Make sure you are evaluating risk reward, taking proper position size, position management. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Smash the like. Punch your dog. Subscribe to the channel. No, don't punch your dog. All that stuff. All the stuff I say, again, that stuff, that thing. And also, this was a long stream, and I'm getting out of here. CW, good to see you, man. Good to see everybody. Appreciate y'all tuning in today. Hopefully y'all enjoyed it and got some useful content. Yep, all that stuff, and then the things as well. And I'm out of here.